All right, what is up, everyone?
Good evening,
Pause this
folks.
first. What is up, everyone? I am actually going to be watching episode 25 for real this time. I'm not doing anything. It's a Sunday afternoon. I'm bored, so I'm going to be watching this. Feel free to watch it for me for as little or as long as you want. But since I was going to be watching it anyways, thought as well I might as well stream it and talk about my thoughts as I watch it. So let's continue.
Sorry, I'm a little
And,
late.
and also, yo, Medbach, what's up? So like I was just saying, I'm bored. It's a Sunday afternoon, and I was going to watch this anyways, and thought, well, might as well live stream it. There's no point in not. And I can commentate my thoughts as I think of anything. But for the most part, guys, I'm just going to be watching this, and there's nothing much else to it. You can watch it for as little or as long as you want with me. But yeah, I'm on episode 25, so let's do this.
Today. And
yeah, I probably won't talk that much, like, until I think or want to say something, and then I'll probably say something.
wrestling what feels like it's a head cold coming on. Took my friends out to dinner the other day, and he had a head cold, and I think he gave it to me. Thanks, Sean. So, take a look at this as a disclaimer. It's important you understand that there are risks involved.
Oh, I'm glad, dude. I'm glad it helps.
Alright, so dollar index, and I promise I won't keep you too long tonight.
New week opening gap.
Left-hand side chart,
I'm telling
that is
you,
the daily
they're
chart.
so powerful, man. You can't see
And
it.
we're still inside this, something about
New week opening gap.
cost and efficiency here.
It's so powerful, man.
And
I'll make this a little
I'm
smaller.
not certain yet. I'm not convinced that we're going to go higher
And this needs to
yet. The reason why I'm concerned about it is we have this shaded pink area is the same thing over here on the right hand side. This is an hourly chart of the same instrument. So it's a dollar index, daily on the left, hourly on the right. This shaded area here on the daily is this shaded area here on the hourly chart.
I'm trying to get rid of the background.
We have the new week opening gap, which is the abbreviation NWOG. That's this area here from Friday's close to Sunday's opening. We always extend that range throughout the week because it'll act as a magnet. It'll draw price back to it. Unless it's a runaway freight train where
Whatever,
it
I'll just keep it.
just keeps on going in a trending environment. You want to be aware of where that gap is relative to last Friday's close and Sunday's opening price. Take that range, divide it in half, and you'll get the consequent encouragement, which you won't be surprised, I'm sure, to see that's where all these bodies are resting. Okay,
That's so cool. All the bodies rest right at
so it's not just
encouragement.
a ES futures tactic; it's algorithmic. So it's going to refer to these price levels, very specific, not supply and demand, not anything else. It's just simple understanding of what is coded in price delivery. It's predetermined, whether you like it or not. It is what it is. But you have to look for these signatures to repeat when you're not in a trending environment. When you're in a trending environment, maybe one time it'll touch it, and then off the races it'll go. It won't
So
return. back to it.
ICT just said,
One of the
like,
classic
he
telltale
just
signs that
confirmed
you are
that
in
it's
a consolidation.
predetermined.
It's
I don't know, man. I don't know
most
if I
likely to
believe
continue
that.
is if we see
But
price come back to it
maybe.
multiple times intra-week. We're probably not near a near-term price run of any significance yet. So you have to be very nimble, trade intraday, but there's no reason for you to be fearful or thinking that, well, I want to get a big run, and forcing a trade in that environment is problematic. So you have to be aware of where that range is, utilize it just like support and resistance. The way the books talk about support and resistance, treat that opening gap on the new week on Sunday, the highest high and the lowest low, which is going to be representative of whichever's higher, the Friday's close or Sunday's opening. The other price is going to be the opposite. So it's either Friday's close is higher than the opening price on Sunday, or Friday's close is lower than Sunday's opening price. Okay, that's the only two things that can occur. Then you divide that range of that gap in half. That's consequent encouragement. Those three levels are highly, highly sensitive. Price will absolutely gravitate right back to those very specific price levels, and you'll see it again tonight, to the tick. And I propose these things to you so that way you can wrestle with them on your own. You don't have to subscribe to the view I hold, and
He's
you've never
talking
convinced me
about new
otherwise.
week opening
My
gaps.
fingerprints are all over it.
I already know.
But you don't have to subscribe to the fact that the markets are delivered by an algorithm.
Yeah, I already know
If you want
most
to
of
subscribe
what
to
you're
the idea that it's a free market, it's supply and demand and buying and selling pressure, by all means, run with that. As long as you're using the concepts without
yeah, bro,
admitting
it's
to
not.
that view, the concepts will serve you well. Okay, it doesn't matter if you subscribe to that view or not.
Yeah,
But
it's not that view. That's for sure.
looking at what we have here on the hourly chart on the right-hand side, these are too clean for me. And tomorrow's trading, because we traded up into the bottom end of that fair value gap, retail sees this as a
fair value gap. It's crazy.
bull flag on the daily chart, and I know it's probably not zoomed in really tight, and I apologize.
Precision on that.
I was trying to get this to show up
on the low time frame. This is a fair value gap. I would look for a flow state.
But I'm a noob when it comes to live streaming, so it's a work in progress. So bear with me. You can get these ranges obviously by looking at the hourly chart. And then seeing where it's at here, and which is the encouragement I'm trying to provide for you. So don't just simply take my stuff.
Oh my gosh, it's
Well, I've done my analysis because ICT talked about it. Now you got to go into the chart and do the work. Annotate that we have the levels on your chart. When you watch it print real time, you'll see the sensitivity of those levels or the lack thereof, and that'll give you insight as well.
Volume balance.
So what I'm looking for dollar is, do we fail to go any higher than this? Should we start to break down? What would be a valid breakdown in my opinion? Looking at the hourly chart, if we go below the lows,
why is it lagging so much?
If we go below these lows, there's really nothing down here that needs to be rebalanced. Everything's overlapped. Every candle, the next candle here, we trade down to that low. This candle, we trade all the way back down into this candle and run back higher. This candle, we trade back down and then overlap over into this candle's high. So everything is back and forth. It's like a well-painted wall. Okay, imagine you're a painter and you're taking the paint, applying it to the roller. Every time you roll that roller on the wall, it's distributing the paint, just like the price is being distributed to this chart here. And every time it goes up, it comes back down, making sure it leaves no gaps. So this is very efficiently delivered all the way up to here and now here. The only areas of the inefficiency that exist on this chart is a very, very small little separation between this candle here, down close candle, and this candle here at low. Very, very small one. Because we've essentially repriced back down into this candle's high with this drop, or this opening here. And
I'm just going to pause it for just a second and let the buffering load out. Hopefully it stops in just a second. Okay, let's play it.
If we're going to run higher, because with all this is a wreck. Okay, I mean, this is a lot of this really difficult price action to work with. So in short plain terms, I'm requiring the market to show me a lot more right now. Whereas I can argue that, okay, the daily chart, we've had very strong momentum on the upside. This is reasonable to expect a pause or a slowdown because of the fair value gap. But if it's really bullish, if it does rally above the fair value gap, my eye goes right to here. Okay, that buy-side liquidity pool, which was an old volume balance now, turned potentially a buy-side liquidity pool. So if we start to run higher, now as we get above here, what would I like to see if we rally? Not plan A, not plan B. I'm telling you what I'm looking for because I have no hard line bias going into tomorrow. Because I can argue both sides of the equation here. I can make an argument that here's what I would look for a bullish run. This is what I look for a bearish run. If my analysis is ever like that, and my teachings and my students know this as a hallmark to me, I'm usually a one-way street. Okay, and this is what I'm looking for, and that's it. But the time, if you're wanting to be mentored by me, my transparency is always when I don't know, I'm going to tell you I don't know. And there's nothing wrong with admitting when you don't know. Students generally look at me and they think that I'm always going to know everything that's going to occur next. There's sometimes I don't know. And don't try to press yourself into that expectation or hold that expectation over yourself because it's unrealistic, it's unhealthy, you're not going to be able to sustain it, you're not going to be able to deliver on it. I can't even deliver on that. So the point is, when the market's communicating,
you can kind of ignore that this wick.
I don't know what the algorithm's going to reprice this. It's going to go higher.
This isn't a fair value gap because it really is a fair value gap. Even though we press down over and over again,
overnight we're into tomorrow,
in
and we get above this fair value
gap.
All of this is back and forth, except for this small little area here. We're going to one candle come up, reprice to the low on this bearish order block. If we rally above this fair value gap and it comes down and touches this as support, preferably before taking out this high, then I would feel comfortable that it's going to probably run up into the midpoint or mean threshold of this up close candle here on the daily chart. I'll leave that homework for you to determine what that price level is. And it would have to get through that level before I would even consider here. So if it's bullish, the draw on liquidity would be mean threshold of the bullish candle on your daily chart, and then the buy sell liquidity pool here. Now, this is where the argument is for me with the internal dialogue of looking for bullish or bearish, because I can frame both sides. We have left relative equal lows. What I would have rather seen today is if we would have came through these lows here and then delivered this. Then I would trust the fact that we would probably be seeing higher prices in dollar and continued weakness in
true.
foreign currencies and or
He's
stock indices.
admitting that there is
But because we
sell-side
have
liquidity
left
pool here.
both of them, it gives me peace of mind to rest
This is
on my
why I
hands and
say
say, I don't need to
react,
do anything
not
right
predict,
now.
because
That's
you
a
don't
very
know for
important
sure
lesson
which
for developing
liquidity
students, because
pool we're
it's
going to
always
go to.
this tendency to want to do something, to want to push the button to trade, see what happens when I push the button. I want to see what happens.
have to be prepared for all
in this
outcomes.
instance, if you were to do that right now, in my opinion is just that, it's just an opinion, you would be gambling. Because there's nothing hardline in terms of
That's what
high
I'm
probability
saying.
for it to
Don't
go higher or go
try
lower.
and predict the
because
future.
we bump up
Wait for
and look
the
at the bodies
market
you're
to
expecting
give you
low
an
end of that
actual
range. That's
entry
the fair
towards a
value
liquidity
daily
pool.
chart. And that's a higher time frame daily range. Also note that this right here, this low, between this high, that's a bearish breaker. These two down close candles together, it's all one for the hourly chart. And that's that range from this candle and this lower candle here, the two down black candles, on your chart. I didn't add it here because I don't want all the business on my chart.
Yeah, if there's
You
no
can do this tomorrow.
opportunity, the hardest part
Take a
of trading
rectangle,
is
layer
when
top of
there's
these two
no
down closed
opportunity,
candles, these black
doing
candles on my
nothing.
chart.
And I'm working
Extend
on
it to the
too.
right, and you'll see you have traded up into that.
So
So if we break
I understand
lower,
that's one of
come
my
back up and touch
weaknesses.
the small little fair back
And I
up
wanna
here,
get better
I would
at
treat
it.
that would be enough for me to look for potential weakness going down into this low here. If we take out this low, then I think we're really going to run for the sell side below here. That does not mean that the dollar's going to collapse and go lower and go into 101 or something to that effect. It just means that I would look for this intraday tomorrow, which is really the climate or market profile that we're in right now, because it's
if
indecisive.
I was going into the
One could
market,
argue either case, and neither one of them being high
right,
probability.
I would have my liquidity pools marked out.
You're
So I
basically
would have this
gambling,
marked out as a liquidity pool.
and you don't have
we
anything
could go
behind it
here,
except for you would want this to occur versus
but also that we
what's the market
could
really showing you. Because if my concepts are there and it's high probability, it's
continue
going to be
higher.
next to
I'd mark out
impossible to
liquidity pools
argue
to the upside as
the
well.
other side of the equation. In other words, if I'm bearish, I see no way whatsoever for a bullish scenario. So that means I'm high probability, low resistance liquidity run, going short. If I'm bullish, I see no opportunity for a shorting opportunity for me with my concepts. Then I am in high probability long, and with the expectations of low resistance liquidity run. Low resistance liquidity run signatures are going to be easily identified when the market's one-sided. And don't think that it's always a trending market, Michael. That's the only one that you trade in. No. Today I did an example of it today. I tweeted out, and you'll see, I'll go over it. But it doesn't need to necessarily be in an existing trending market.
Exactly.
It's when I'm looking for
and all these people
the liquidity.
saying,
Once it's
"Oh, the
obvious,
market's in
and
low
you'll show
probability
those signatures
conditions."
tonight,
Like,
yes.
no, bro, the market's
Once they're
always
there,
right.
it's next to impossible
And every
argument.
single month is
The
a
other
new
side of it.
excuse.
And that's why I have strong
for low
conviction.
probability
It's the
conditions.
question
Like,
I
no,
know. How do
the
I
market
know? How do
was
I
very
trust?
intentional
When do I know
about
it's
what
going
it
to do
did.
these low resistance
You were
liquidity signatures?
outside.
When it's going to run real fast? How do you know anything in the chart?
It's kind of
When you
funny
do this,
though.
it's going to do this. It's going to do that. How do you know that? It's because I'm inside of a low resistance liquidity run signature within a market structure that's predisposed to go in the direction I'm trading in. Everything is heavy-handed on my favor, not against me. And there's certain things in the market and price action that will deliver that understanding to you, but you have to do this for a number of months and weeks and see it, and it'll start communicating by experience. You can't just simply listen to me talk about it. I can't give you a chart and point to this is what it is, so therefore now you understand. It needs to be experienced. It's something that you forge through experience, daily, doing it and seeing it. That's the only way you're going to get that skill set, which is why the failed students in my community that either are here failing or have left and complained, they don't want to wrestle with this. They wanted it easy, 1, 2, 3, this is how you got to do it, and it's easy all the time. Well, it's like that when you can identify the low resistance liquidity run signature. It is just like that. But the problem is the market doesn't always deliver those conditions, and you have to identify what that is, navigate
That is key. That is a gem. That is a gem right there. Listen to that again. The market is easy when there's low resistance liquidity run conditions, and we know that. We've caught so many trades where we've gotten good low resistance liquidity. The hard part is doing nothing all the other 80% of the time, right? Because we can take a really good trade towards low resistance highs, and it's gonna work out. But if we take bad trades in low probability conditions, that cancels out all of our gains. So we have to be patient and wait for very specific signatures. Like
it's easy all the time. Well, it's like that when you can identify the low resistance liquidity run signature. It is just like that. But the problem is the market doesn't always deliver those conditions, and you have to identify what that is, navigate it, or stay out of it. And I teach my students, don't try to trade in high resistance liquidity runs. You saw the way the market was holding it back the other day when we were calling it on the day the Fed chair was trying to dog in or whatever. It was holding it down, it was consolidating, and then finally it went to where I said it was going to go, but not easily. It was met with a lot of resistance, and it keeps you feeling impatient while waiting for the trade to develop and pan out. Versus today, as we'll go over, where it's like, okay, Johnny on the spot, ICT comes in, it's going down to 41.60, and then bang, it's just a few candles, it's handed to you on a silver platter. That's what I try to teach my students to look for. Those immediate instant gratification setups where you're not wrestling around. It doesn't give you that much time to be worrying about whether you're on side or off side. It means you're either on the right side of the trade or not on the right side of the trade. If you start getting into trades and it's not moving for you within a reasonable amount of time, what's a reasonable time? I don't know. It's going to be relative to you and your personal appetite for patience or the lack thereof. Because a setup is a setup, and I don't know what time frame you're going to be trading on. But if you're using a 1 minute chart, you want to be seeing some movement within 10 minutes of your entry, minimum. Okay, like you've got to see something showing you. If you're in there for 10 minutes and it's not performing for you, then you're probably not on the right side, or you enter too early, or you're absolutely just completely wrong. And there's a lot of things that are beneficial to me as a teacher using these 1 minute charts because it gives you lots of practice and it also gives you instant feedback. Whereas if I try to teach on a daily chart, it would not be as effective. But the same logic would be utilized on that daily chart. So I don't know what we're going to do with dollar. I don't know how that is going to impact the stock market, and I don't know how it's going to impact Forex. So that's what we're going through. That way you can sleep soundly tonight. I don't think it's going to be a big explosive move that I need to be worrying about because I can't see it yet. It's not there yet, okay? The cards are still being shuffled, okay? And obviously we'll see what happens in the morning. All right, euro dollar on the left-hand side is the daily chart. As I mentioned, we went up into our city, which is fair value gap, hit that beautifully, came back down into this buy side balance, sell sign efficiency. This shaded area is this shaded area on the hourly chart on the right-hand side. Now,
oh wow,
look at what we have here. We have this drop into this fair value gap on the daily chart. So it goes down, basically down into consequent correction from about midpoint of it. And then we have this really nice run. Trades up to bearish order block, buy side's taken, trades up and then rejects it immediately. Comes back down into an order block. So well here, and then we rally and then we sloppily just increase and then run one more time up into this, but leaves the high intact. And then we just fall off today. And now we're resting right on top of that same fair value gap that's over here on the daily chart, which is this up close candle. And I'll leave that for you. You should already have your chart based on
these key levels, like this order block,
for you on YouTube the other day.
You can take this order block, drop down into the aligned time frame,
everything I mentioned for
and
dollar,
find a change to delivery off of that and get a trade.
Everything I mentioned for dollar, apply it here, but in reverse order because everything is inversely correlated. I like the fact that there's a buy side liquidity pool here. I like the fact that we're sitting at the fair value gap again. I like the fact that we've had all of this back and forth price action in here, and we moved higher and left that there.
Same with this
and we
order
dropped
block,
today.
right?
To me, it feels, and this is just me speculating right now, it's not me forecasting, I'm not co-signing, because for me to say that would be indicating that I have an opinion or bias already for dollar, and I don't. But I like that the market is sitting at this level, and we have all this rejection in here, and it just looks too obvious, in my opinion, that they left this here.
The key is
so does that mean
levels that
the
are
euro
already
dollar
likely
and the
going
dollar's
to
going to go lower? Well, if it goes here for euro, then yes, the dollar index would drop. But I don't know that yet, and there's nothing in here that would get me excited to take a trade. I wouldn't be able to do anything, so I'd have to wait and see what we get tomorrow. What do we see at 8:30 in New York time? What do we get at 9:30's opening? So it's a matter of wait and see versus when there's other instances where the market is really giving me clear indications about what it's likely to do. I'll talk to you about it, and I'll say, this is what I think it's going to do, and there it is. And it'll be one-sided. There won't be the both sides of the equation, but I'm telling you the things I'm looking for. If you're watching price action and you see something that you know has been taught to you that would expect to see delivery to that level, whether it be going lower or going higher, you'll know what I'd be looking for if I was there with you at the time saying, okay, what do you think is going to go to ICT? Well, I would think the draw would be here. So I'm giving you both sides only in those instances where I don't have a bias that's determined. So I give you both sides. That way you can study it, and you can also beat me to my analysis and or my review, so that way you can compare and contrast what I show in the next video review versus what you already have in your annotation. So that way it's interactive. It allows you to be progressive about learning, not just simply listening to ICT and hear me talk about the things I'm talking about. It allows you to go in and let your eye and your attention go to where you like within price action, things that you want to see as a signature for your model. So it allows you to develop organically, not me try to shove you into a mold, which won't work. So we're indecisive right now for euro, just like dollar. All right, even the S&P. I mentioned that we had a buy side liquidity pool here a week ago or so, and we ran up into that, obviously. We have a volume bounce here, and we have a volume bounce in here. We ran up, failed to go above the high. Today we had a little bit of a give back. These two volume balances, while I don't have them noted, you want to have them both annotated on your daily chart and extend them through price action for Thursday and Friday
so important
because those levels may be
so
impactful.
Reactionary.
And you don't want to just do like one big bulky area. Don't use the highest high and the lowest low of the volume balances collectively. Do them individually and then label them respectively in your chart. That way, when you watch price action, if it responds to those levels, and I'll explain what that means, what it would look like, they're going to behave just like the new week opening gap, which is what's being shown here.
And that's what I was saying. I was saying volume imbalances, they're basically new day opening gaps on the lower time frame. They're the same. And ICT just confirmed it, right? These low time frame volume imbalances are like little baby New Day opening gaps. They're little baby ones. So anyway,
on the hourly chart. So the S&P hourly chart, Friday's close, that's what this level is here. And then Sunday's opening down here. Actually, I just realized I had that one hourly chart on. Yeah, that's not accurate. Yeah, that should be on a different level. The Friday closing price and Sunday's opening price, make sure that's on your chart. Then whatever that range is, every new week, and you do the same thing every time there's a gap opening. So when we close our session at 5 p.m. each day, Monday through Friday, well, not Friday, but Monday through Thursday, when we open again at 6 o'clock, when there's that 1 hour gap of no trading, you want to do the same thing I'm teaching you to do with the new week opening gap. Use the closing price and then the new opening price at 6 o'clock. And then that range, divide that in half and extend that throughout the next 12 to 16 hours. And that right there will also act much like you see with the new week opening gap. All right, so we have...
Wait. What did he... I thought he was talking about the new week opening gap.
1 hour gap of no trading. Monday through Thursday. When we open again at 6 o'clock, when there's that 1 hour gap of no trading.
Oh, he's just saying that New Day opening gaps are like the same as New Week opening gaps. Yeah, no duh.
You want to do the same thing I'm teaching you to do with the new week opening gap. Use the closing price and then the new opening price at 6 o'clock. And then that range, divide that in half and extend that throughout the next 12 to 16 hours. And that right there will also act much like you see with the new week opening gap. All right, so we have hourly chart here. It was kind of wild today, really. A lot of uncertainty in the beginning of the day. It was a mess. I wasn't feeling well on top of it, and I just didn't.
Yeah.
I didn't like what I was seeing, and I was able to look at a couple different little small moves and such. But it wasn't until later in the day where I felt very strong conviction about what it is I was looking for, and I'll explain that now and go into lower time frames. On the left-hand side, there's a 15-minute time frame. Here's a homework assignment.
Here's that same New Day opening gap or
15-minute chart on ES. This high. You want to put your Fibonacci on the closing price and the high and get the 50% level. Then take your Fib and place it on the 50% level down to the close. That new 50% level is 25% of this wick. That's what this level is here.
Yo.
Go down to your lower time frames. And
that's kind of valuable. We can take wicks, not only cut them in half, but we can cut them into fourths. Listen to that again.
Take your Fib, closing price, and this high, you want to put your Fibonacci on the closing price and the high. And
that's kind of useful. I'm going to remember
that. Then take your
that.
Fib and place it on the 50% level down to the close. That new 50% level is 25% of this wick. That's what this level is here. Go down to your lower time frames and you'll see, much like you see over here. Look how price is sensitive to that. Hits that level, trades down. Now, how's that useful? Why is it even useful? Because I'm sure some of you are thinking, well, that's cherry picked. If you think that the market is bearish, and you're going to come to these conclusions in your own analysis in your own good time, if you think the market's not likely to go through an old high that has a big long wick like that, if it's extremely challenging for it to go higher, it will not likely do what? Trade a consequent encroachment, which is the midpoint of the gap. So if it's not going to go there, where could it go? I don't do things in zones, okay? I don't just go out there and say, well, here's this big area where, if it goes there and turns around, I can come back and say, look how smart I was. Okay, I give you very specific levels because that's exactly what the algorithm's going to do. If there is no algorithm, then there would be what? Randomness. But the argument is there's all this buying and selling pressure that always completely delivers precision when you're looking for it with the lenses that are providing you. If you look for the algorithm with these signatures,
use the 0.25 when
footprints.
You don't think the market's going to go to the.
You'll see the evidence is all over it. But if you go in with the argument that there is no algorithm, it's buying and selling pressure, it's all completely random, and
it's obviously not random. So obvious.
Usage of a indicator-based strategy. That's the real reason why price is going up. Then you'll see what you want to see because you're going in looking for what you want to see.
Actually, I have to use the bathroom real quick. I'll be right back. I'm back. Let's keep it going. Here we go.
Put away and say, okay, if there is control, if there is a management function behind price and how and when it goes where it's supposed to go, how is it possible? Because this, I already know that there's an algorithm. You're talking to it. So if you're on the fence about it, then how does one argue how all these things with buying and selling pressure and
how could there be so much
theories
precision
and approaches to trading,
and
how is it that
random?
price stops and turns on a dime and goes to the levels that I'm outlining
impossible.
beforehand, and their logic repeats itself over and over again, and it makes just perfect sense. It makes perfect sense when you look at it that way. I can't be convinced. No one could convince me. Like, if I didn't know it for a fact, no one would be able to convince me after seeing this, like this, that there's something behind it all. There's something controlling the ebb and flow. It feels like it's organic. It feels like it's, it's a free market. Yes, the market's going to fluctuate. There's all kinds of movement around here. It's fine. But the argument you see, and this is what's proposed all the time, all you have to do is look at the depth of the market, look at the DOM, look at the level 2 data. You'll see the orders. That's what's going on. Those orders are spoofed. They're not necessarily there. Just because you see them on there does not mean that that's exactly resting there.
Crazy.
It can be there for a little while and then pulled. Don't think it can happen?
Wait a second.
Oh.
Level 2 data is spoofed? Wait, I want to hear more about this. What?
All you have to do is look at the depth of the market, look at the DOM, look at the argument you see, and this is what's proposed all the time. All you have to do is look at the depth of the market, look at the DOM, look at the level 2 data. You'll see the orders. That's what's going on. Those orders are spoofed. They're not necessarily there. Just because you see them on there does not mean that that's exactly resting there. It can be there for a little while and then pulled.
That makes so much sense. Like, let's say I have a limit order for 100 contracts, and then I just delete it. Well, someone was probably thinking that was going to be a good spot to buy because they saw that I had my limit order, but I can remove it. I can take it off. So I think I get what he's saying, but anyway.
Don't think it can happen? Oh, there's people at Goldman Sachs that got fined for doing it. Oops. So that's a gimmick. You don't need depth of market. You don't need level 2. Everything is in the chart.
I agree with that. But also, I think it can be helpful. I think everything in trading is helpful. I don't think, I think it's a little closed-minded to say it's not helpful at all. I think depth of market. I want to learn more about depth of market, to be honest.
It's being told to you with the open, high, low, and close. Those 4 price levels remove the idea of a free market. Because when you study price, based with time, certain times of the day, the market will do certain things. But you're told over time in indoctrination that buyers are controlling the market higher and sellers are controlling the market lower. Oh, sellers are coming in, they're muscling the market. No, they're not. Buyers are coming in, they're muscling the market. No, they're not. You may be buying when price is going up, but you didn't push it there. Volume, we got a new high, but it's on low volume. That doesn't make any sense now, does it?
I can see that.
Here we have a higher high. Look at this. Big old run up. It's candles. It's huge. It's really big. It goes up and takes out a previous high. But it does so on lower volume. And you're going to argue and say that it's buying pressure that took it up there. How is it arguable that buying pressure was less than the previous time it rallied up there, but yet it outperformed it in magnitude and delivery? That's make-believe. Okay? That's a fairy tale. But the big lie that's told over and over and over again eventually is accepted. And it feels uncomfortable to wake up and see things aren't really like this anymore. There's something that has transitioned. So there's something different in these markets now. And they're highly efficiently delivered. And there's nothing to be afraid of. You guys that are arguing about it all the time, you don't want to come to this team. There is no ICT team. Okay? You want to learn how to read price. That's it. That's all you want to do. And when you identify these signatures that repeat, and there's a number of them that I'm going to teach new this year, you will see there's absolutely nothing to be fearful of. They're not going to stop it. It can't be stopped. As long as there's a market, it will repeat. And that's the wonderful thing. It cannot be hidden from you. It can't be.
That's so cool to know. It literally can't be stopped because it makes sense to me. It's the flow of the market, right? If you try and trade against smart money concepts, you'll lose your edge and you'll have less money and you'll have less influence. If you trade with smart money concepts, you have more money, you have an edge, which gives you more money, which gives you more influence in markets, which gives you more control in markets, which, positive feedback loop, right? So, that just makes total sense to me. I think I see spot on. If anyone tries to go against the natural flow of, driving to the highest probability liquidity pool or whatever, they're going to get outcompeted and lose their money, and then and then the market's going to continue doing it, right? So in my opinion, as I agree with ICT, as long as there's markets, this is going to keep going forever. So that's my opinion.
As long as there's going to be an open and a closed field market, and the valuation that we can measure at the highest high and the lowest low, when that stops, when the ability for us to be able to see that and have that information in our hands, when that is kept from you, then and only then should you have something to worry about. Because as long as you have access to data, guess what? You have everything you need. Because everything we're reading here is how we're going to fleece the retail. We're looking at these moments where the market is likely to do damage or trick, entice, lure traders in, go up and engage a pool of liquidity for buyers. If it meets a criteria that fits a narrative, why should it go up there? Well, if there is an entity that is collectively referred to as smart money, they will use that liquidity above an old high to get short and aim for what? An old low or an inefficiency below market price.
Mm-hmm. See, that's what I was talking about in my video on turtle soup the other day is you want to see your entry point, your change of state of delivery, be resting above old highs. Because think about what's happening. You're buying someone's stop loss above those highs, and then you're riding it to the opposing liquidity pool and buying and selling someone else's stop loss. So you're from one stop loss to another. That's why that video I made on turtle soup the other day was, in my opinion, that was really valuable.
Entity that is
listen to this again closely.
That fits a narrative. Why should it go up there? Well, if there is an entity that is collectively referred to as smart money, they will use that liquidity above an old high to get short and aim for what? An old low or an inefficiency below market price. And then they will offset their short position at a discount price. While those discount prices are being viewed by retail traders as, oh, this is our stop loss because we're trying to be long, and their willingness to sell below an old low is ideal for smart money that wants to buy at a very low price. That's how they cover their short. So when you change your perspective and you have that market efficiency paradigm shift in the awareness of how prices actually being booked, listen, it's not something they want widely understood. That's why it's not taught. That's why it's not shown, and that's why you're going to see resistance to it. Because there's a lot of people in this industry that don't want you to know what you're learning here. Too fucking bad, because it's happening. So back to the S&P. This quarter level of this entire wick, that right there, you want to study that, okay? And in your notes, in your journal, like something up in here in this area here, you want to write that when there is a heavy bearish stance
this,
on price,
break of this
consequent
low,
approach
and
of
then
double
for value gap
is
supports price
likely
to go
not
lower.
to be traded to. If you suspect that is the case, you get the very specific price level of 1/4 of the wick. Don't take my word for it. Go back to your charts and your jaw will drop. But with that said, the market trades below this short-term low here, breaks lower, and then we have the classic model 2022 that I taught last year on the YouTube channel. Market trades up into it, sells off, consolidates a little bit. We go into the New York session with relative equal highs here. That's buy side. Now, here's one of the things that you also will feel uncomfortable about. You're going to look at certain candles that I'll refer to, and you're probably looking at this and saying, well, why didn't you use this old high here? Well, look what happened. We have a SIBI here, sell side imbalance, buy side inefficiency, which is a fair value gap by classification, but specifically, it is sell side imbalance, buy side inefficiency. The market's repriced up into essentially what? That entire range here. And then we left it. So what is this becoming? A balanced price range. But we have to factor in time of day. So everything that's being shown here on the 15-minute time frame, go over here to the 5-minute chart. Suddenly things become a lot more clear because you can see now here we have 1, 2, 3 times the market has provided what? A smooth edge. In your journal, you write, smooth edges tend to be made jagged. So what happens?
That makes total sense because this, right? There's going to be a ton of stop losses above these triple equal highs. So smart money enters, absorbing those stop losses to get liquidity to enter their position, and then they run it down to an opposing liquidity pool and hit opposing stop losses. Do you see how this works? Triple equal highs, use those triple equal highs as a liquidity entry function because you need stop losses to get orders filled. So they get their stop losses hit, and then we run down to opposing liquidity.
There's these smooth edges that look like resistance to a retail trader. So you're asking me, why am I not using this high here when I've already explained that? What I'm teaching you is, once it's already done its work here, and then it creates a lower level of smooth relative equal highs, 2 highs, and they have 3, what's the retail crowd going to think about that? Oh, that's strong resistance. So therefore they can think what? They can go short and put their stop loss, which is what kind of stop? A buy stop. So they're going to try to go short. The market provides them the reason to want to go short. What's above here? Buy stops. So the market does what? It rallies up, fails to really bump through it much here. So what does this look like? That's a quadruple top. Man, we got to write a new chapter in the books now, right? So they're thinking it's really, really strong resistance. They drop it down. They drop it one more time, take out the previous low here. Everybody's on board now. They think it's going lower. And then where's the market go? Run right back up, takes out all this buy side liquidity. I was looking for this morning, but I was fading in and out of sleep because I don't feel well. And I'm watching it. All of a sudden, I woke up from a daze, and I saw the volume imbalance sitting there on the chart, and it was going back right up into it. Oh, let me please get this thing on, because when you ever start Camtasia, it doesn't just start right away recording. It makes you wait these 3 seconds or whatever, and it's like, come on, man. Like, you got to wait for this thing to start up. And the whole business while I'm doing that, I'm trying to figure out, okay, what I got to say, what am I going to say on the chart? I was like, I'm just going to just enter it, and then I'll annotate as I go. Well, because it has created this relative equal high here, and we ran up, took that, I mentioned this morning on Twitter that I said that you note 4160.
Also, people move their stop loss. People move their stop loss from the highest highs to the lowest to cut loss. Exactly, bro. You're getting it. What was he talking about with the new day opening gap?
And just start right away recording. It makes you wait these 3 seconds or whatever, and it's like, come on, man. Like, you got to wait for this thing to the volume imbalance sitting there on the chart, and it was. And I'm watching it, all of a sudden, I woke up from a daze, and I saw the volume imbalance sitting there on the chart, and it was going back right up into it. I was like, oh, let me please get this thing on, because when you ever start Camtasia, it doesn't just start right away recording. It makes you wait these 3 seconds or whatever, and it's like, come on, man. Like, you got to wait for this thing to start up, and the whole business while I'm doing that, I'm trying to figure out, okay, what I got to say, what am I going to say on the chart? I was like, I'm just going to just enter it, and then I'll annotate as I go.
I don't know what volume imbalance.
Well, because it has created this relative equal high here, and we ran up, took that. I mentioned this morning on Twitter that I said that you note 4160, which is the new week opening gap high. So that's basically it's the Friday's closing prices last week on ES. So when we're up here, I'm thinking 4160. What's the narrative that gets us there? Well, whenever you see smooth edges like this, always expect that type of scenario. And it runs up into it here. Once it does that,
that's good to know.
You're in a deep premium. The market participants are going to see that as well. That's a bullish breakout. Resistance is broken.
It just makes sense too. Accumulation, right? What is this? Accumulation, manipulation, distribution. Like, you guys see this, right? Accumulation, manipulation, distribution. Every phase of the market will move in this way. Accumulation, manipulation, distribution. How's my weekend been? It's been good, pretty good, bro. Appreciate it.
There's buyers that have buy orders sitting there protecting the short position, but there's also traders that's thinking, okay, this is going down, maybe all the divergences that may be occurring in your indicators, which I don't need to see an indicator to know that they were diverging in here bullishly. The market rallies up and they think, all right, now I got to have confirmation. What's the confirmation? We have to see these levels here broken out. Because if it breaks out like that, then they're going to feel confident that they can go long. Wonderful. So you have buyers that want to break out
you guys
and
see
go
how
long,
this
and you have
is
buyers that want to protect the short.
Accumulation,
Beautiful.
manipulation, distribution.
That's a very, very, well,
I bet there was
saturated
S&T
area
with
for
this high
buy side liquidity.
Either
who would
ES or
benefit
YM.
from price just going up there
I
just a
bet
little
NQ
bit?
or YM, because this is ES.
Buyers ran out of steam here. Buyers ran up here. Buying pressure took us up to here. And then all of a sudden, what? Buying pressure ran out. Why would it do that when there's a huge pool of
So
liquidity?
that's some of the best turtle souping opportunities is when we also have S&T. Like, let's say NQ was making a lower high here. You could have extra conviction that this would be a turtle soup. Because this is already a 2022 gap. Because we swept liquidity, broke structure. So this could be a turtle soup within the 2022 gap. It's a higher time frame. It's already an entry point. So you just kind of like delay the entry until you know that it's going to be a turtle soup. And then you enter kind of like at a delayed entry. But this is still a valid entry because it's the same. It's the 2022 gap. Because we swept liquidity, broke structure for a value gap. So now you're just kind of like giving yourself a little bit more time to make sure that this is going to be accumulation, manipulation, distribution, and you enter on a turtle soup right here after we've already got sweep, break of structure, retest the value gap, wait for stop losses to build up, and now this is going to be incredibly high probability, especially if we got S&T.
Here of buy orders. Oops. Oh, we got a problem with that narrative now. Retail just failed with that logic. It doesn't make any sense. You have a huge pool of liquidity here with real buyers. Why didn't that send it higher? Because it isn't designed to do that. It's only going to go up there and trigger those buy stops. So that way, smart money, the collective entity that does what I'm teaching you to do in price action, they're going to go in and gather up all that liquidity to be counterparty to go short.
Exactly.
They're going to sell it to those buy stops. As the market runs right up in there, when the algorithm prices it right there, that's when their orders come in. Boom, boom, boom. Where's it go? The level I told you this morning on Twitter. 41.60. I'm sorry, 41.46. So 41.46, the closing price on Friday, that was a draw on liquidity. A lot of manipulation, a lot of just back and forth. And once it cleared these relative equal highs, then it was off to the races. Real quick, sudden decline. But now let's go into a lower time frame chart and take a closer look at it. Well, we'll still stay on the 5-minute chart here. Here's that same zoomed in area where buy-side liquidity is resting here. It only bumps up to right there, like that. And once it hits it, does it spend a lot of time waiting around? No. Market reaches lower.
Crazy.
And while we're inside of this area
So
here,
clean.
we're still at a premium. So I'm going to show you how we can use the PD array matrix to map out a premium to discount market in a implied dealing range. This is the part where you take notes, folks. All right, so we're zoomed in that same area here, but now on a 1-minute chart. This is the PD array matrix, and the range I'm using here so that we can do it in your own charts, not just simply take my chart and think you've done the work. From this high down to the 41.46 even level. Now, why am I referencing that? Because that's the target I told you the price was going to go to today, this morning on Twitter. It's going to return back to what? The new week opening gap. It's going to be like a magnet, folks. It's going to want to draw back to that. Why? Because for the entire weekly candle,
thanks, bro. I appreciate it.
Between the highest high and the lowest low, if it's not trending market, what's it going to do?
Cool.
It's going to treat the new week opening gap as fair value. And it's going to want to revert back to that continuously.
From a place of experience.
And that allows for new sentiment to come in.
That's
it goes
cool,
back to that gap. Okay, a lot of algorithms, not the algorithm that's the price engine, but the algorithms that operate on the fund level, they will likely use that.
I turned it down, right? I turned it down because it was buffering. So that's why the quality is down. If it starts buffering again, I'm going to turn it down.
Gap to constitute their new trade idea based on a new sentiment idea because it trades back to it. Much like I'm teaching you to view it as what? Support and resistance. So if it's up here, and I'm telling you all, focus on 41.46 because it's likely to pull back to that weekly gap that opens on Sunday. What's the nearest price above the gap? It's the Friday's closing price, which is 41.46. So if that's the level we're looking for price to go to, and we're above it, and we're looking for lower prices, we create a high here. It starts to pull back and go below the high here and the relative equal highs that we've had now 4 times. Remember the slide before I went to this one? 4 times it banged into that level, and then we hit it here, and then started to sell off. Where are we at when price is trading right here? Are we in the red area, which would be considered premium relative to the high, to the target where we're looking to trade? We're looking for the draw on liquidity, the terminus. Where is it likely to go to? Remember, that's the thing I'm teaching all of you to focus on. The part of this puzzle is not knowing where it's going to next. And you're focusing on all the order blocks and what fair value gaps and when are they staying open. You're missing the whole entire plot. You have to be trained this year. Use this time with me to understand why I'm teaching you how I'm teaching you. Where is it likely to go to next? Because all that
it's buffering.
Question of what you're looking for and why it shouldn't do that, that becomes much easier to figure out when you know what the market's likely to do. And also, if I don't know what I'm doing, I won't be right, will I? That means there's no algorithm. That means there's no way that there's an algorithm. If I'm calling specific price levels as the next draw on liquidity and they don't continuously, consistently deliver, guess what that tells you? There is no algorithm. And every friggin' day, I'm telling you. I'm only tweeting the wins. I'm not deleting anything. So come on, join the party here.
I love that.
Okay, this is the real shit. Okay, I'm just gonna tell you like that.
I
this is the way it is.
All my trades on Twitter wins.
This is the thing you're looking for. But you can't.
Forget, though.
You cannot.
I don't want to get to that point.
Learn this with one video or video series. You have to be walking it with me, and you see it, and you understand it, and you'll understand what each candle means each time it creates a new one. It falls into place into a storyline. The storyline is they ran the buy stops above those highs.
And this takes lower.
Broke lower. You already knew 41.46 was where we were looking for the draw on liquidity. I guarantee you, when we were seeing the rally figure, like, you got it wrong.
Consistent from this point going forward.
I'm not gloating. I'm just telling you. I see this happening.
I will.
I'm reading all of your minds with these candlesticks. When this thing starts to break down, and we have a target 41.46, you need to take your high, if you're short or if you're looking to be short, the high that forms that you think is a suspect high. A suspect high is a high that's been blown out, and you want to see if it maintains the rejection. So we don't know if this high is going to be, well, taken out, if you will, until we trade from premium to discount. We have that right here. Then the market does what? Returns back up into a premium. I'm scrambling to get Camtasia open right here. Finally gets open, I get my chart open, and then right here. What's occurring? Look closely. I've already shared it with the Twitter community, and I actually showed it on execution. So I traded this, not just simply me talking about in hindsight, so you can look at the video on YouTube. I'll take the annotations off in a second, but look what we have here. We have the high to 41.46 even, which is the Friday closing price, which is the high end, the top of the new week opening gap. With that price level as a magnet, if price is up here relative to that target and the high is here, if we go short in here, we're shorting what? at equilibrium or premium. Either one is okay. But you can't go in and start pyramiding once we get down into here. Because once we start crossing into the halfway point of the discount level, you're too much in a discount to add more to it.
Where's the
Which is the reason why you see me do
is
one and
there a
done,
buy gap?
and there it is. Yeah, I got in. There was no opportunity for me to do a pyramid. It was just a straight shot.
Doesn't
41.46.
look like
Thank you very much. William Bam, thank you, man.
Doesn't look like a break of structure.
But let me take the annotations off and you can see. Pay no attention to the
Personally,
fact.
I only see the break of structure being this. But maybe I'm missing something. I see this as an inverse value gap. But I don't know.
The standard deviation 1 takes us down to that really nice low. But that's just extra, no charge. So here's the level. That's equilibrium. Do you see the volume imbalance right here? I've been teaching it.
That's cool.
That volume imbalance is at equilibrium and then a very small premium. My entry was short, instantly delivered. This type of movement right here, that is exactly what a low resistance liquidity run signature performs like.
Wow, man. But why was this an entry point, though? Because doesn't he trade liquidity sweep break of structure? There was not really a break of structure in here. Was there? I don't understand. Is he considering the change to delivery or break of structure? That's the part I don't get. But I do see how this volume balance was incredibly sensitive and then react off that volume balance to go run these lows. This was in premium.
Now, do you want to be in a move like that?
Because
or do you want to be
personally,
in
I see this as liquidity sweep break of structure happens here, and then fair value gap happens here.
move like this? Buying down here, hoping it gets to this level up here. Buying here, riding it, rolls all the way down this deep against you.
And then
rallies up. Okay, so
possibly like this would be an inverse fair value gap entry, like on the higher time frame. So like, what if this was the 1 minute? Then maybe like this would be a 3 minute inverse fair value gap or something.
I mean, so I'm gonna give it to Nova.
And then maybe after we get this inverse fair value gap, let's say it closes here, I would probably re-enter. I would re-enter at, so let's say this was a 3 minute inversion. We close here. I could take this as a Jan entry at the volume imbalance. So meaning I wait for a little bit of a retrace into the volume imbalance and then we deliver. Yeah, I retested CISD, but I didn't, yeah, it totally retests CSD, but I mean, ICT doesn't really talk about flow state. Like, he never talks about flow state. So I think he only really trades 2022, at least from what I've seen. So, I don't know. It's a retest of a change state delivery, but it's not, definitely doesn't look like a 2022 model, at least to me, unless if this is a fair value gap, but it doesn't look like it. It's kind of blurry. Yeah, I don't know, man. Let's just keep watching.
Rolls back against you. If you put your stop here, you're taken out. Then it rallies up here, but you've been taken out. But it went to your target. That still happens to me if I trade in high resistance liquidity run signatures. I can trade in them, but it doesn't give me peace of mind. I don't want to be in a trade that has this roller coaster back and forth and still gets to where I think it's going to go. So there's other days to trade where I won't have that, which is how I teach my students.
I wish I could have it be this quality and
when
not
we
be
get in,
laggy.
we're looking for very quick response in the price. We want to see instant feedback. We want to see how price goes right to what we're looking for. Or we don't want to be messing around. We don't want to be sitting around worrying about twiddling our thumbs, hyperventilating, huffing and puffing, cussing, cursing the market. I've been there, folks. I've put my fist through several monitors over my career. I've done it. I don't do that anymore. It's boring to me. If I got it wrong, I got it wrong. I'm not going to lose my mind over it. I know what I'm looking for. In the future, it will repeat. It just means I've done something incorrect. And I assume that responsibility.
Exactly. Finally, yeah, ICT is exactly right. Enough with all this stuff about, the market's, it was low probability conditions. No, the market's always right. The market is always right. Like, stop blaming the market, because the market is going to do whatever the people that have the most buying pressure are going to do, right? Well, the people that have the most money are going to do. How do they get to have the most money? Because they had the greatest edge. So the market is always right. Yeah, I'm thinking the change state delivery, that's personally how I would enter this. But ICT has not talked about, flow state or change state deliveries. He's only talked about the 2022 model, so it's not, typical. Maybe he sees the change state delivery as a break of structure, though. That's a possibility. And then sees the volume imbalance as the fair value gap. But anyway, let's continue.
Trader, but you won't hear that in books. You're going to hear people say, push your edge. Don't worry about the drawdown. Trade your way out of it. Everything that's wrong. That's what's promoted.
Yeah, I agree.
And there is a logic to look for opportunities that deliver instantaneously, powerfully, energetically.
Like, genuinely, the market's always right. And all these people saying, oh, low probability conditions, blah, blah, blah. No. If it was low probability conditions, you would know not to take a trade. Why did you take a trade in the if it was low probability conditions? You're blaming the market, right? So either A, you know it's low probability conditions and you know you shouldn't be trading, or B, you just can't blame the market, because the market is gonna do what the smartest, the people that have the most. I already explained it. I'm not gonna re-explain it. You guys get what I'm saying.
And it repeats over and over and over again. Look closely. The volume imbalance here. Why am I even looking at that? Because of everything I just outlined, how fast we move from this high. It's not likely to do what?
I mean,
come back up to any of this imbalance.
But
it's
he's
showing
not
us
saying
what?
that part. This is the part I don't like about ICT, because he does not explain specifics. Sometimes he just leaves things open-ended, and you have to kind of read between the lines. Like, obviously, for me, this was a flow state, because liquidity sweep, 1 minute change state delivery, retest aligned with the volume balance. So personally, I would take this as a flow state entry. But what I'm saying is he's not saying that. He's not explaining it. That's the part I don't like about ICT. He's very unclear. This does not look like a 2022 entry. This looks like a flow state entry. So I don't know what. Like, it's just frustrating to me that sometimes he's just so unclear.
Bounce here. Fair
Like,
value
obviously, it's a change state delivery, but he's not saying that.
Another fair value gap. Another volume imbalance that did what? We traded up into it here with that little bit of a wick, and we went down into discount. Halfway between the high here and target of 41.46. So I know some of you are thinking, okay, this is really complicated ICP. It's not. It's only because you're explained to you for the first time. It gets easier as you see it with me.
Dang,
you start walking through it,
now. That's
and you'll see this is exactly what I'm utilizing. I'm not creating new things each time to keep you from ever learning it. My whole time with you this year is for you to learn this, not hold my hand, ICT. I don't want to hold anybody's hand. I got a wife, and that's the only hand I'm holding. This return back into that volume imbalance right there. That's it.
It's kind of
that's
funny.
the last. That's it. It's the last bus stop, and then we're out of here. Elvis left the building, and here we have it, delivering right where I said it was going to go, when nobody else up here was expecting that price.
So the cool thing about this, right? Because I would take this as a flow state, where I'm guessing this is a higher time frame for value gap. Let's say this is the 1 minute chart. 15 minute for value gap. 1 minute liquidity sweep, change state delivery, retest. So I would enter this as a flow state. Does that make sense? Because we have these low resistance lows. We get the change state delivery. It's aligned with that volume imbalance. Liquidity sweep, 1 minute change state delivery, aligned with the 15 minute gap. Okay, I'm entering on the change state delivery, stop loss at the high. And then you can see, if you measured out standard deviations, this would probably be like 1, 2, 3, 4. See how nice flow state is? As long as you understand, like, what change state delivery is going to be high probability. The one after the liquidity sweep with low resistance lows. That's going to be the one that's high probability.
So the narrative was, run the buy stops, accumulate that as a short position for smart money. So the composite.
And the best part about this is it's aligned with that volume imbalance. So cool, man. So cool.
Sells short to the buy stops and buys the sell side liquidity to cover the short. And the market rallies up to some random level between this candle's low and this candle's high, which is consequent encroachment. That's exactly what you're seeing right here. The market trades lower. So the market trades down to midpoint, rally, midpoint, sloppy, and then between 1050 and 1110, there's going to be a macro. I already know some of you are thinking, okay, but you said at 1050 to 1110, and then there's 11. There's two of them. Okay, what can I teach you with Forex? What happens between 10 a.m. in New York local time to noon New York local time? What time of day is that? That's London close. That order flow that comes in at that time, you're going to have a macro that occurs at the 10 o'clock hour and the 11 o'clock hour. Then at noon, between 1 and noon, New York local time, there's an algorithm that runs there too, which returns us back to what? The morning stops. There is a teaching coming. I want to make sure I have it in video format because I know some of you guys are writing books to try to put it in print to beat 9 books out there, but you're not going to be able to efficiently talk about it. You'll talk about something I've already done in a video. And in my books will refer to videos that I've already put out in public. So that way everything's time date stamped and everybody knows where it came from. I'm sorry I have to do it like that, but these goobers out here, they're trying to make a name for themselves. It's just ridiculous. So between the 10:50 and 11:10 hour, there's a macro that will form that makes a run on liquidity that has not been taken yet. What does that look like? We have the market rally up and then breaks a short-term low here, relative equal lows, trades down, and then creates this fair value gap.
Interesting.
It's a gap,
he considers
yes.
this 2022 model? Because I don't even see a liquidity sweep here. But he's saying break of structure for value gap exists here. Let me rewind that.
What does that look like? We have the market rally up and then breaks a short-term low here, relative equal
So
lows.
I don't know if I agree with that. I don't consider this 2022 because we do not sweep this high, clearly. Yeah, we break this low. We have a fair value gap. We do not sweep the high. I don't know if I agree with that, but let me know what you guys think.
Trades down and then creates this fair value gap. It's a gap, yes, but what kind of gap is it? SIBI, S-I-B-I, sell side imbalance, buy side inefficiency. So what is it lacking? Delivery on the upside. So it overshoots it here. That's fine, no problem. Small little gap here. If there's a gap like that, your stop has to refer to that as well. Remember, if there's 2 fair value gaps, your stop has to at least respect that higher level fair value gap. Well, it means it's a larger stop. That means you're using less leverage. Okay, stop trying to be at the highest form of leverage. Just because your funded account says you can trade 15 contracts doesn't mean go in trading 15 contracts. Believe me, they want you to fail.
That's
they
very
make money doing
important,
that.
by the way.
Okay, and again, that's the reason why I'm not
value
going
gaps
to
put together. It's just one fair value gap. Because conceptualize that. What is a fair value gap? It's a gap. It's not anything other than a gap. So what I'm saying is if there's 2 fair value gaps, this is not 2. This is 1. This is 1 giant fair value gap because the gap is from here to here. This is the true gap. Think about the market in terms of like genuinely just common sense. This to this is the gap. Screw the real definition for a fair value gap. Pay attention to where is the gap in price action. It's from here to here. So you gotta have your stop loss above that.
And beg me to sign with them all they want. I'm not going to do it. 2, you have to do this responsibly. And there's a right way of doing it. And that means managing risk, not managing the potential to make the most and use the most leverage. That's what you're trained to do. Every influencer out there is telling you to do that. Push it. Stack your funded accounts. Get 20 accounts. Yeah, get 20 of them. Because when you blow all 20 of them, that means you're going to have to do what? 20 re-ups. They want that. They absolutely want it because they know greed is going to tap you on the shoulder. You may conquer fear for a little while, but greed's going to be like, hey man, listen. It's real easy to restart these things. So just risk it. You want the biscuit? You got to risk it. And then you should to bed. Well, they get 20 new restarts.
Exactly.
Just like that. Because they know you're not going to stop. You're going to do it. So when you have 2 fair value gaps, your stop loss has to respect
That's
that.
why
And that means you have to
yesterday,
do what? Use
when I was
less
marking
leverage.
out those
It's about
repo for
making
value
money.
gaps, I just used common sense. I used where's the gap in price action. For value gap is important, but it's more use common sense. Where's the actual gap? Where's the actual inefficiency? And mark that out. Exactly. You get
It's not about showing on social media, I'm trading with 15 contracts because that's the $150,000 account limitation I can trade with. I'm doing full leverage, my lot sizes. We're talking about male genitalia measuring up again. That's not what this isn't. It's not about that. It's about consistently managing risk impeccably, being precise about what you're doing, when you're doing it, why you're doing it, taking partials along the way because you don't know if your targets are going to get hit. I can hold for full terms. I can do that. But if I demonstrate that all the time, you're going to be wondering, well, I can't do that. And you're going to fail more times trying to do that versus learning to take partials, giving yourself that green belt, that
I
blue
always
belt, that
take
red
partials
belt,
because
brown
it's
belt,
never all or nothing.
It's
It's never all or
terms.
nothing.
I can do that. I can do 100 handles up and you've seen it. But I teach gradually. Take small bites of that elephant and you'll devour it. But it takes time and it takes discipline to do these things over and over again. Being content with enough. You've done enough to learn this much this week, this much that month. Over the last 3 months, where have you gone? What's your progress like? So back to macro. Remember, this was supposed to be a real short video. It never ends up like that. Just like a Twitter space. You always get more than you paid for. So in this imbalance here, it rallies up into the small fair value gap here.
It's really good to
and
hear.
then we have the move lower. We trade down to the low here, rally back to the midpoint, break lower once more, sell sign. So every instance of London close between the 10 o'clock hour and 11 o'clock hour and noon, there's several things that occur that are algorithmic. I'm going to give you specific details about what you're looking for, when it should form, what times and what days is it not likely to form, and disregard it. They're usually trending days. Trending days, you're not going to see a macro. It's just going to be like, boom, goodbye, off to the races, and it's not going to be anywhere seen. But how many times do you see that in trading? It's not a lot. So most of the time, you're going to see certain little quirky things that repeat, and you can trade with them. You're going to find that they themselves can be your entire trading model.
Feels like
So
school,
what does that mean?
man.
You can schedule
Like,
your business
you just kind of
down to a
zone
20-minute
out for a
window.
little bit.
What?
And then you're like, oh, yeah.
Yes, Dorothy, we are no longer in Kansas. We're in the wonderful land of Oz. So anyway,
Nice
market comes back up,
too,
fails come
man.
back up, and falls short of the closing price on Friday, and then big surge lower, trading down into the low that Fibonacci from the high down to 41.46, pretty much nailed that. And then we traded into some sloppy conditions going into the afternoon session. Now, before I go into the next slide and close this discussion, if we know that the market has traded from the high here lower, what is the lunch hour going to do? It's going to run on what? Buy stops. So buy stops during the morning session, where would they most likely be? We have this here, but we don't have a whole lot
it
of
literally feels
interest
like
in
school.
something so shallow like that.
It's like
Also,
when you're in one of
what
those
did I tell you to
boring
look for
classes
throughout the
and you just
entirety
kinda
of the week? If there's an opening gap
you just
on
like
Sunday,
vibe
you
and have it
extend that
playing in
through
the
the entire
background.
week.
Like if it's a Zoom
So,
class,
are we interested in just running
just
these
let
here?
play in the
No.
background and then
What high is
occasionally
between
you'll hear
the
something
gap
that's
that's formed
valuable.
on
You're
price
like,
close and Sunday's
oh,
opening?
nice.
This high here. So 41.46. That's the morning high. Why? Why am I going to pick that? Because it has to do with that weekly gap opening. The market's going to want to do what? It's going to want to draw back into that.
Yeah.
So,
Definitely.
who's making money right now at the time of looking at the chart right here? Who's making money? Shorts.
Shorts.
So where's their stop? Yes, they're right here, but more specifically, they're right there. Because this high is forming when? At noon. You're already in the lunch hour. You're already in the lunch hour. That's not a high that runs the AM session high. I'm not saying the highest high. I'm saying the most recent high. Because why? Think, folks. Think. As the market's dropping, if they're short, what are they trying to do with their stop loss? Jam it down to the next relative high. Because they don't want to see the high taken, so their stop loss is going to be put just above it. So that's why you're going to focus right here. You understand that? I know you can't answer me, but think about it. When you're looking at price, you have to think about who's in that trade. How are they managing that trade? What is the worst case scenario for them on a nightmare level that if they think it's going to keep going lower,
It's so important
they
to
think it's
think
going to
about
go
the
to
market
4,000
conceptually,
even. I'm not
guys.
saying that, but I'm saying that there's traders that think that kind of
Like
stuff all the time.
genuinely, stop thinking about the market in terms of mechanical entries. You're going to fail. Think about it conceptually. What is someone who's short thinking? What is someone who's long thinking? Where are they going to get stopped out? Where are the longs going to get stopped out? Conceptualize exactly the stop losses and where they are on the chart and take your entries based off of that. You're going to be way more successful. Way more successful. So, yeah. Let's continue.
They don't want to see their high taken out. Even though they have their stop loss there, they don't think that's going to happen. Well, ring in the lunch hour. Here's the noon hour beginning. That's that short-term high. So we're not interested in that. We're looking at that high here. So this high has AM session buy stops. So between noon and 1 o'clock in the afternoon, all this movement here, this is a high resistance liquidity run too. It's a lot of roller coaster ups and downs. And where does it go? Ultimately, right where I mentioned, we'd see logically the AM session most recent high that would be considered a high for trail
Yeah, I
stop
do have a
losses while
Discord
the market
server. It's
dropped in the
free.
morning session.
Links in my bio.
Real important, folks. If you don't have that recorded, if you didn't hear
Thanks,
it properly,
bro.
listen to it several times in the video because it's very plain language. It's plain language. It's plain English. It's very simplistic. But if you're new to trading, if you're new to speculation, then
Follow me on
been using
Twitter
stop
too
losses.
if
A
you
lot of people
want. I
just
need
don't
more
use
Twitter
stop.
followers.
Those that use a stop
Trying to
think
get me
like that
people to follow
because
me
that's
on
what retail
Twitter.
books and logic teaches them to
Like,
do.
I
I'm
have
telling
so
you
many more
how to
followers
be
on
a
YouTube
carnival.
compared to Twitter.
I'm teaching you how to be a predator to go after these retail-minded theories because they're flawed.
Exactly.
They're designed to fail. They're absolutely leading you into the slaughterhouse. You're following all this Judas theory. You don't identify it because you think it's just, well, it's randomness that got me stopped out, and I'll just hopefully win the next one.
That's exactly
You're
the
losing
point
because-
I'm trying to make, guys. So many people blame the market for their losses. They blame the fact that, they lost because the market was low probability or it was random. And it's like, no, the market's always right. The market's always right. Stop trying to blame the market and actually understand what happened in your trade. Learn from your loss. Learn from it. I mean, I don't get how other people don't see it like this. The market's always right because the people who run the market got to that point by having the greatest edge. So how could it be anything else than that? It's just so dumb for me. For people that say, oh yeah, it's just low probability. Like, well then why did you trade the low probability conditions? It's just so stupid, dude. I don't get it. The market's always right. If you lose, learn from it. Learn from it. And even if it was a good trade and you learn from it, and it's a loss, worst case scenario is you learn from it. So there's no downside to having that mindset, in my opinion. And so anyway.
You are trained to lose. You're taught well. Lots of books and lots of authors out there keep promoting that garbage. It's not real information. It's misinformation. So the buy stops that are resting above this high here, we run through that. Where? Post lunch, on the other side at 1:30. 1:30's here. We're missing it by, that's a minute or two.
I used to blame my brother. I was like, you are bad luck whenever you go with me. That's so funny. That's so funny, man. Yeah, I feel you always look for something to blame. You always do. At the end of the day, learn from your loss. Learn from it. Because it's you're going to learn something if you go into the charts and actually diligently ask what happened. You're always going to learn something. I mean, I don't get why more people don't see it like that.
It runs it. But look at this high here. Go back and look at your charts. Your jaw will drop. Go over to this volume imbalance right there. This candle's opening price, which is the low of the volume imbalance. That tick is the very tick high of that candle. That's crazy. Right there. So how far can it go above?
That's crazy.
This high to run the stops. Well, look to the left up. What do you see? You see this wick. Consequent encroachment is just above that. That's not reasonable. If it's going to run there, it's going to run a little bit higher. So that means it's going to go above this. So what's above that?
Stop loss.
Volume imbalance.
Oh, volume imbalance.
Bam. Hits it.
Bang.
Failure. You're thinking bull flag. You're thinking it's going to continue higher. It's not. Only thing it's done is reverted back to that weekly opening gap. And it's broken above it here to do two things. Take out the stops here that were trailed for shorts. And induce new buyers that think of that opening gap as a breakout. So now we've done what? We went below it. So now if we can get back above that opening gap for the week, large funds will come in and they'll buy that.
You said you're trading for 3 years and you're 17. That's crazy.
So they're doing what? Buying on a stop. They're buying with the expectation it's going to continue higher. All the way down into here, cleaning up all this inefficiency. We have sell side below here, 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 and stacked heavily at the AM session low. Small little fair value gap in here.
That makes so much sense. You guys see how all these lows are so low resistance? We come back up. Look at how algorithmically generated these lows are here, right? We come back up, take out this high, in this giant gap. Once again, conceptualize the gap. Don't literalize, oh, this is the fair value. No. Where's the gap? Here to here. This is the gap. We're going to look for our entry as a reaction off of this. Come down, inversion, fair value gap, probably a higher time frame inversion within here, and then you can go run these low resistance lows. And maybe also change the delivery right here, right? So maybe this was a 15-minute gap, 1 minute change to delivery.
Between
that's crazy, man.
The high and the low. So the middle part of that is a consequent encroachment level. Trade right up into it here. Beautiful delivery. Fair value gap. High to low. We're in a premium. Think about that.
Yeah, man, me too. I started with options.
From this high to that low as it's retracing. We're in a deep retracement. I don't need an indicator telling me that's overbought.
I think everyone does that.
Do you need to plot a Fibonacci on this high to that low to see that we're not already in a premium? Your eyes have been trained to it by now. So the only thing you're using Fibonacci's for is to find out the exact price for the mean threshold of an order block or consequent encroachment of an imbalance or project targets.
That's awesome.
That's the only reason why I touch a Fibonacci. That's the only reason why.
Wait, what's the only reason why?
Do you need to plot a Fibonacci on this high to that low to see that we're not already in a premium? Your eyes have been trained to it by now. So the only thing you're using Fibonacci's for is to find out the exact price for the mean threshold of an order block or consequent encroachment of an imbalance or project targets. Yeah. That's the only reason.
I mean, it's pretty. I agree. It's pretty common sense. You can figure out, oh yeah, this fair value gap's in premium.
Reason why I touch a Fibonacci. That's the only reason why. This is optimal trade history. This is OTE. That's the flagship pattern of my challenge. So I guess about now. So the only thing you're using Fibonacci's for is to find out the exact price for the mean threshold of an order block or consequent encroachment of an imbalance or project targets. That's the only reason why I touch a Fibonacci. That's the only reason why.
What's the thing about OTE?
This is optimal trade history. This is OTE. That's the flagship pattern of my channel until I guess the 2022 model was given to you last year. The market breaks down below 41,
So
40 and a quarter.
I'm guessing
Comes
he's
back
just
up,
saying
hits it,
use
fills in a
OT.
fair value gap there, breaks lower, small little imbalance here. Incidentally, this is your homework also. This wick right here, and we're looking at a 1 minute chart. So this wick right here between 415 and 430, that wick, find out what that consequent encroachment level is on that, the midpoint of that wick. Extend it through this fair value gap, and you'll get the very tick high of this candle right before it drops down. Yep, that's one of my favorite pet entries. I love that one. I love it. And
wait, what?
On that, the midpoint of that wick. Extend it through this fair value gap, and you'll get the very tick high of this candle right before it drops down. Yep, that's one of my favorite pet.
I don't know what he's saying, but all I see is 1 minute change state delivery off of a 15-minute gap. I don't know what he's saying, but I do see this as flow state. I'll say that, right? 15-minute gap, 1 minute change state delivery, retest, measure out standard deviations, 1, 2, 3.
Pet entries. I love that one. I love it. And it'll serve you well when you know what you're looking for. Don't take my word for it. Go in and look at your chart, and you'll see it. It's perfect. It's a perfect to the tick delivery on that
Sometimes
candle.
you just have to think, I just have to understand how to trade for myself and absorb information from everyone else. But at the end of the day, trust myself and what I understand, and then use that to implement my own edge into the markets. Because at the end of the day, no one's going to be clicking that buy or sell button but you. So you should know exactly what you're doing and not take anyone's word for it. And so that's why, for me, like, I don't really understand what he said, but I do know that this is a 15-minute gap probably, and this is a 1 minute change to delivery, and that we have low resistance lows. So when we retest this, I'm probably going to go short.
And then suddenly it delivers. Goes lower, trades back up into old order flow here. One more time. What do you see here? 1, 2, 3. Breaks lower. What's below these relative equal lows? Sell side. So the market went up here for buy stops, then ran down below these lows that was engineered. Starts rallying. Someone's going to buy that. They see this is a bull flag. It rallies up. Oh, it's going to break out. It's going to trade up to here. Even if they don't think it's going to break out, retail logic thinks, okay, this is resistance, so hold it until it gets to that level because that's our target. They're not thinking trade up and through, but they're thinking it's going to go back up here. It's got room to still rally.
Six watching.
We're stalling here, turning, then attacking the sell side that was engineered with these runs higher. Buyers are going to have their sell stop below that, which is convenient for the smart money that's
look
selling.
at how algorithmically generated these lows are, right? Just a perfect trend line of lows. This is what you want to see going into your trade. So we have probably a 15-minute gap, and then 1 minute change to delivery. We retest this. I feel like 8 or 9 times out of 10 we're going to go run those low resistance lows, right?
To the old buy stops here. They have a net short position. Smart money's net short here. They add here. They take some off here.
I have to use the bathroom.
Rally back up.
All right, here we go. Let's keep going. We're not stopping. We're going to keep going. One day at a time. Let's just keep one video at a time, one day at a time. Let's keep going.
Fills in inefficiency. This high
We're
here
not
falls
gonna
just
stop.
one tick short of consequent encroachment here. Don't take my word for it. Go into your charts and you'll see it. Trades below these relative equal lows. What's below that? Sell stops. Why? Because the market rallied up. Somebody's going to chase it. They'll chase it and buy it up here and put their stop loss down here. You don't think they can do that or think they won't do that? Look at social media. They're doing it all the time. The market drops, attacks the sell side here. That's a partial, and then bang, right below the morning session low. Smart money sells, short, adds the shorts, takes partials, adds the shorts, covers at terminus below morning session low, and then and only then the market goes back into sloppy choppiness, getting ready for another day of the slaughterhouse on Thursday. So this year I've talked about a number of things repetitively, and I've said certain things about the opening gap, and I said to extend it through the entirety of the week. As long as we keep coming back to it and we're not moving decisively away, we're not in a trending model. We have to trade short-term price fluctuations and look at buy-side liquidity, sell-side liquidity, inefficiencies, and be nimble. Take our setups, get them and get out. Don't fall in love. Don't marry the vein. Don't go in thinking, oh, this is a short-term trade intraday, but now it looks like it's really going to go higher. Let me hold on to it, because you will see it reverse on you. How do I know that? How do I know that you have to trade like that? Because we keep coming back to that weekly gap opening. Think about it, folks. If this market was going to tear off, it would have done so, right? And would it be coming back to this opening gap on Sunday? No way. Absolutely not. So, use this insight going forward. Yeah, I promise you, it isn't me just using it when it works, because I've already taught this and my students use it. It's something you trade with in perpetuity.
So I think
you use
what
it in
he's
the
saying
future.
is when the market's consolidating, chopping around, the new week opening gap is going to be useful throughout that entire consolidation. So use it as confidence.
All the time, because it's going to repeat. It's absolutely going to repeat. Look at the logic that I've already outlined before tonight. It's in this chart right here. It's doing exactly what I codified, exactly what I trained you to look for. This is exactly how it's coded. And it repeats every week, every day, and it won't stop. So if you found this one insightful, and I don't know if I'll live stream tomorrow or Friday, but I will let you know by way of Twitter tomorrow how I feel. If I feel like I'm going to have the energy to do it, then I'll do it. If not, we'll do it on Friday. Okay, but I will certainly do it by Friday, if not tomorrow. And the only way you know is on Twitter. Until next time.
I wish he went over,
be safe.
All the stuff he's gatekeeping, because I know he's gatekeeping so much. Like, for example, gold block levels, time-based SMTs. Like, I know he's gatekeeping stuff. I wish he went over all of it. Let's keep going. Hey, Jake, I have some weekly profile PDFs. Where can I post them on your server? Just go ahead and post them, man. That would be great. If there's not a channel for it already, I'll make a channel for it. I really like to use NDOT and WOG as draw and liquidity or for me too, bro. Me too. I'm the same exact way. Other people, if they don't get it, that's on them. But new week opening gaps, new day opening gaps, super powerful. Super powerful. Same with volume balances. So yeah, if there's not a spot for weekly profiles, then I'll make one for it. I should watch Zeus, yeah.
Good evening, folks. Sorry I'm a little late today. I've been wrestling with feel.
We just watched this one. So we gotta go, right?
Sunday? No way. Absolutely not.
Yeah, we just watched this.
So, use this insight going forward. Yeah, I promise you, it isn't me just using it.
Okay, we're on to this next one here. I mean, I'm not doing anything, so there's really no point in me not continuing to watch. Once again, watch for as little or as long as you guys want, as much as you guys want. But, I'm going to be already watching this anyways, so might as well live stream it. If it's helpful to anyone, if I say something helpful, I want to have it be live streamed because, it's value to someone, and I want to be able to provide that value. So even though it's kind of boring, I'd rather just talk, be able to provide that value to someone in case it is actually valuable. So, because I'd be watching this anyways, So, when is he going to start talking? And I want to post my analysis like bonds, DXY, Forex. Reply me when you're done. You should join. There's another server specifically for that. It's the journals server. So go down, scroll down, click journals, and then you can post your own analysis in that server as much as you want, as many channels as you want. Just let me know what channels you want, and you can post your analysis in that journal server. That's what that server's for. Is he gonna talk? All right, there we go.
Hello, hello, hello.
There we go.
We should be. Well, I'm not sure. I haven't even done this right, to be honest with you. Hello, hello. Hello, hello, hello. Okay, I can hear myself. Yeah. So, I was trying to figure out how to get this audio to work. Total new when it comes to live streaming. Was going to do a Twitter space. I said, well, just watch the rest of the day. Give you your second live stream. We'll talk about this morning. I'm looking for an opportunity for it to drop down to go below that 41.05 at quarter level.
Genuinely feels like we're in school with that boring professor. And you just kind of sit all bored and stuff, and then eventually he says something useful.
I was running fib projections for targets earlier at the beginning of the stream, and that's what I have down here. I talked about, I think, 40, 98, 50, I think it's about 2. I don't know, off the top of my head. Was
Not talking much.
I think it was doable, but running the numbers here on that fib, taking this price leg from here to here. Let's show you again real quick.
Oh,
standard deviation, basically a measured move using this high down to that low, this low being a fulcrum point. Just because I'm measuring a high to a low like that, doesn't mean, oh, it's going to definitely go to that level here. It has to obviously continuously prove that it wants to keep going lower. And it first has to break below that low, and again, that's the fulcrum point. So whatever move it has done from that low to high, it's like a measured move idea, and swing down to like that. I got this from that series from Larry Williams from 1995. He had this little transparent piece of plastic that had several lines on it. 1, 2, 3, 4. Yeah, had 4 lines and a straight line in the middle. He called it his target shooter. And I just basically said, well, I'm just going to use the perfect measure move here, and that'll be my target shooter approach with just using the fib tool. Right at this level here, I like to get another partial off there.
So what I'm seeing here is liquidity sweep, break of this low for value
So I
gap.
talked about last night in the
So maybe I'd look for a flow state off of this for value gap.
that new week.
Once again, I like to look for a higher time frame model, like a liquidity sweep, break of structure for value gap, and then look for a flow state off of it. Or same as with this, like there's probably a breaker within here. I would want to see that Reaper for value gap get held there,
which is abbreviated as NWOG. I know it seems like I'm trying to confuse you. I'm not. It's easier to do these little small letters to describe a concept that has a lot of words. It just makes it easy. And also, it's real quick for me to type when I'm doing live examples.
That's crazy.
I'm trying to record them for Twitter. It's easier for me to type those letters and you know exactly what I'm looking at or what I'm referring to, versus sitting here trying to type the words and then most likely by getting it wrong, then my obsessive compulsive flares. And the whole time the market's moving and I'm trying to focus on all that. It's a little bit more difficult than it probably looks. Small little volume imbalance in here. I'm watching that. what's nice is you guys can actually turn this into real high definition and then zoom in on the chart. So whatever doesn't appear all that crisp and easy to see, you can zero in on an area and just zoom in with your phone or your screen on the computer and see real close and real tight. Oh, I was saying the new week opening gap. Last night on the live stream, I guess it was a live stream on it. The levels I had on the chart, and I was referring to it as the new week opening gap, I was half right. Meaning that I was showing this level here, and the midpoint between that level, which is the high on the new week opening gap, which is technically Friday's closing price, and this level here, and then I split that in half, and it was the midpoint of that, which is the upper quadrant
Oh, I see.
of the entire range.
This is the new week opening gap from here to here. From this to this. And look at how we respect consequent encroachment. That's crazy. Jake, there's a guy named Prom King's friend. He's asking me to join his server. He is kind of a mod or something. He's just a guy in the server, but he has his own thing. He does like reflect. He has his own like trading AI journal. Yeah, he's not like a mod in my server. He's just some random guy in there. But I don't know. He has his like own business or something. So I don't know. I know a little bit about him, but not a ton. Yo, 6 more subscribers. You guys are so nice to me. Dang, that's crazy. That is so crazy.
Range of the new week opening gap. And I had forgot that I was talking to my son about it. And I had that chart annotated with that, focusing on that specific range, teaching him. And when I opened up my charts and started doing the live stream last night,
but yeah, look at this new week opening gap, right? From high to low, we hit consequent encroachment. Bang. Bang. You see that?
This is on the wrong one on the hourly chart, and I realized really what I had done. So I immediately went onto Twitter and tweeted the entire gradient new week opening gap, so that way you can see each level. And all that is simply taking a fib and laying it on the low to the high, finding 50%, and then from 50%, lay a fib there to here, and the 50% behind that. Or you can just simply do a 25, 50, and 75 level.
Yeah.
Fib, which is simply going in.
So like we were talking about with the wicks, right? You can take a wick and measure out 25%, 50%, 75%. Those are all going to be sensitive. The same is going to be true with a new week opening gap. So 0 is going to be sensitive, 25% is going to be sensitive, 50% is going to be sensitive, and 75% is going to be sensitive. You can see that's sensitive right here. So that's what he's saying. So just split this new week opening gap into quarters and watch how sensitive it is to all of those spots.
Just a little bit more, honey. Just a little bit more. It's like my...
Yeah, post the PDFs there, and that's totally chill. Yeah, definitely do that. I appreciate it. Thanks, bro.
Wife, she wants me.
Yeah, I'll get you a journal.
You give her money. Just a little bit more, honey. To which I say, just a little bit more, honey. No ratchet ICT here. Come on. Here we are. One more time. Here we go.
Okay, I'm gonna make it right now.
Nice. Can I have a little bit more below it?
You can have as many as you want, by the way. Like, I don't care.
So now what I'm looking at, since I already had this target hit.
I'm not seeing
I'm looking at this
it.
one here. And I have 2 contracts remaining.
Just tell me what journal you want. Just put it in request a journal.
I don't necessarily need to have the 4098.
You see this right here? Go over to request a journal here and just ask whatever journal you want and just put it in here and I'll give it to you.
$50 or the 49.9 level for moral victory.
Wait, what is he saying?
So now what I'm looking at, since I already had this target hit, I'm looking at this one here. And I have 2 contracts remaining. I don't necessarily need to have the 40.98.50 or the 49.9 level. For moral victory, it would be nice to see it hit there today because I can say, well, there you go, screenshot that, and there's some more evidence. But what I want to do here now with the two remaining contracts I have on is I want to eyeball and see if it can go to the midpoint between this target, which has been met, and I took a partial at, and this level here. So if it can reach down to about halfway, I'll close one more.
Wait, what are those levels?
Remaining contracts I have on is I want to eyeball and see if it can go to the midpoint between this target, which has been met, and I took a partial at.
Which is what?
I have on is I want to eyeball and see if it can go to the midpoint between this target, which has been met, and I took a partial at, and this level here. So if it can reach down to about halfway, I'll close one more.
He said been met.
And notice I'm not worrying about my stop loss up here, way up here, completely out of my mind. I'm not worrying about it. It's not a point of concern. I'm focusing on price action because this is a really weird.
Why would you?
Fickle day today.
Why would you
this morning
put your stop loss all the way up there? I don't know why he's not trailing it. I would definitely trail my stop loss at this point, personally.
This is for the jokers that like to come in after the fact. When
there's no reason for you to anticipate us to come all the way back up and hit your stop loss. That'd be just. I think that'd just be.
Post anything live. They haven't caught anything live. They don't show any of their examples or executions, and they go on their live streams and lose $15,000 max loss on their live stream and think that they're somehow a mentor. But when I'm tape reading, I'm taking your attention into specific PV arrays, and I'm telling you what I want to see.
I'm gonna make you your sections real quick. Nice. All right, let me know if that's good. 70-point new week opening half day. Should we look at the market? What we got going on? Let's see. Yo, that new week opening gap's crazy. Oh my gosh. Tomorrow's trading should be interesting. Whoops, wrong display. Dang, look at that new week opening gap. That's absurd. Oh my gosh, dude. It kind of makes sense though, because, you know, I was anticipating this as a higher time frame model. The reason being is we have a daily fair value gap here. See this? Daily fair value gap. Very obvious that this was respected. And then we have, within that, you know, we have 1 minute change day delivery. So right here. So I was anticipating this to be higher time frame model. See how we hit first standard deviation and second standard deviation? But man, I was not expecting it to happen overnight like that. That was crazy. Or like over the weekend. That's genuinely insane. So once again, here's the daily fair value gap. Let's draw this out a little better. Whoops. Daily fair value gap. Where's the... Okay, this is the one I want to use. So yeah, daily fair value gap. That's crazy. That is so crazy. So daily fair value gap. And then 1 minute change day delivery right here. And you can see how we retest this change state delivery right away, right? So daily fair value gap from here to here, we have a liquidity sweep. So accumulation. Accumulation, manipulation. And this is an inducement right there. Manipulation, and so change state delivery, that's our entry point, right? CSD, 1 hour change state delivery. You can see we almost have virtually no drawdown, because once we get the change state delivery, that's when we close above this old up close candle. So you can see that's right here. Entering on the retest, there's virtually no drawdown here. Can you stop notifications? I'm going to post a lot. I'll just close out Discord. Sorry. So yeah, I would go like this. And then measure this out. That is so sick. Bang. 1 hour change state delivery. Second standard deviation hit. And then this is inducement, right? You see how this is inducement? Below these equal lows. Bang. Right up to the second standard deviation. Okay. And then I'd pay attention to this wick, right? We get the change state delivery. I enter on the retest of that change state delivery. Change state delivery, enter on the retest. Virtually no drawdown, right? And then we go up to the first standard deviation and up to the second standard deviation. And just for fun, let's look at the fourth standard deviation. And let's put this in my my journal. Three, 4. So this may or may not hit. You know, expect my potential models to be wrong a lot, because once again, I don't like to try and predict the future, but I do acknowledge that the market does run in models. So yeah, on one hand, it's valuable to observe, but this is not necessarily a prediction. This is just an observation, and then we'll see how this goes. So daily 1 hour. Let's go ahead and put that in the Discord, in the journals Discord. So switching back over here. So scrolling up, I need to switch my screen. Dude, what did I say? I already had this model framed out too. That's crazy. So this is July 27th. You can see how I already had this framed out earlier this week. $4:20, or no, what is right now in Eastern time? I actually don't know. It's earlier for me, so that means it's 6:20 Eastern time. Oh, whoops, forgot to put PM. So you guys can see how I already kind of had this model framed out earlier. Now we've hit this second standard deviation. But once again, this could be wrong at any time. So, yeah. Okay, let's keep watching this. Let's go back.
See, that's not the same thing. It's not the same as going and taking a trade. They're not trades. Okay, I'm not getting wrecked. Okay, I did get on a trade this morning, and it did come against me, and I closed it. And if I would have held on to it, it would have stopped me out with a larger stop loss. So I wanted to engage.
I'm going to switch the screen. I just can't find it.
For you, but it just was simply not wanting to pay me out. And also, I like to take a trade when I don't really have a good feel for what it is I'm looking for. So I'll throw on a very small trade, usually one contract, maybe two, to get me wanting to feel closer to what price is doing. And this is also something you want to do with your demo account. Even when you start trading with live funds, you should have your demo account at the ready, because in the beginning, if you're trading in the morning session, it can be really indecisive. Even though you may have a bias like we outlined this morning, I was expecting an opportunity to go short. That was the real main focus, but I don't mind taking a long to ride up into that 4070.25 level, which could have very easily been rated. I was looking for that trade specifically to go short at, and I was going to try to nail down the high today so I can get on Twitter and gloat. That's what I was trying to do, but it wasn't working for me. It wasn't trying to get up there. So it is what it is. It didn't deliver. It didn't go there. But when I'm calling out specific PDA rates, your attention is placed on that specific area. Now, some of you, and it's probably ones that are real quiet.
You guys are going to make fun of
you probably look at
these.
that and think, oh, that's a trade.
I'll be right back. Alright, I'm back. Let's keep going. Yeah, this is really boring, but you know what? It's the price I will pay to be hopefully a really good trader one day. So, yeah, it's boring, but I don't care. I will do what it takes because I want it that bad. So, let's keep watching. And once again, might as well live stream this because I'd be watching this anyways on my own. There's no reason not to be live streaming it in case, someone finds it helpful. So
let me go in here and push the button, and you've learned the valuable lesson today. I told you not to take trades on the things I'm telling you, because you don't know what you're supposed to be deriving from that until you go through it. So as I was going through the motions this morning, and my son's sitting next to me, he's like, Dad, I'm trying to close my eyes and listen to what you're doing, because I'm saying it out loud. I'm saying it out loud, and you're just basically seeing a tweet. So he's trying to feel out what it would be like for all of you. You're seeing a tweet. You're seeing levels and things I'm referring to, but you're only seeing one piece of it, because I'm forcing you to go into the chart and look at it, engage that very candle, that very concept, and try to get a feeling for what you think price is going to do next. The uncertainty, you have to embrace that. You have to do that part, and it's a scary feeling, especially if you're trying to do it with a live account, which is why you don't want to do it like that. And you shouldn't be doing it with a demo account either. You want to read the tape, get a feel for what price is doing, and just simply because I'm calling out a level, we're waiting for certain things to occur. A fair day, doesn't always necessarily mean once it trades down to it, it's a buy. Sometimes I want to see it trade down to it, through it.
It's almost 4 a.m. for you? Dude, why are you up? No, I do that too. I do that too, bro. I'm the same exact way. I'll just stay up till 4 a.m. I'm like, oh crap, it's 4 a.m.
And come back.
Like, I'm the same way.
Up and act as resistance. But when I key your attention up to it, that gives you time. It gives you time to, okay, this is what we're focusing on right now. This is where our point of interest is, and let's see what he says next. So one of the things you're going to fall victim to is fearing missing out on move, well, like today.
Yep.
So I know, listening to my son, he was thinking, like, Dad, what do you think the number of traders were today that were trying to do something with everything you were tweeting? I said probably about 30%, because they've seen me calling certain things pretty consistently, and knowing what human nature is like, they're going to want to try to pursue the next move. And I started feeling guilty about it. So much so that I was like, I'm going to have to break a rule and just simply call it out plainly when I'm going to take the trade. So I tweeted, said I was going short, and apparently the entire world was listening, and then all the dog pop on top of it. So I think that was interesting. But that should have fixed your boo-boo, okay? If you followed me this morning and you're trying to press the button prior to that,
yeah, it's too much, bro.
Here's
Just get some sleep, get some rest. You're totally good, man. You don't need to overwork yourself that much. So thanks for watching so far. Appreciate you, man. Get some sleep.
You didn't do that because you hurt yourself doing something you should have done, and then you watched it do this. And now you're feeling the very things I talk about in my Twitter spaces, the psychological effects of all that stuff. Watch that midpoint between those two levels. As I'm talking, my eyes right in between. I know it's probably jumping around doing it. Over here and here. So halfway between that. This is what I'm looking at right here. So 41.03 and a quarter. It touches that. And I'll peel off one more. It may not do it. I have to be wrong and it goes the other direction. I don't care. But I like the idea that we trade up into the volume and balance I mentioned live here. And we've delivered away from that. We had a sell side and balance buy side efficiency. We came up into that, let the small portion open. I like that. We're in new lows, but I only have 2 contracts left. So I'm willing to risk it for the biscuit of hitting down a little bit deeper for here and then getting out on that one.
So I think what he did is,
just a little bit more ICT.
what I'm guessing is, accumulation, lower time frame, accumulation, manipulation, distribution. So once again, liquidity sweep, break of structure, fair value gap, entry on the fair value gap. That's what my guess is, right? Liquidity sweep, break of structure, fair value gap, and then targeting lower lows.
Just a little bit more. Thank you so much. Thank you so much for this cherry picked. Is it live or is it Memorex? Uh-oh. I'm showing my age. What the hell are you talking about, ICT? Older folks know what I'm talking about. Is it live or is it Memorex? Was it Memorex? Memorex, yeah. Come on, let's take a profit thing here. Alright, so if I want this level, I'm going to come off of it 1 tick. And then we'll see what we get. Take that off. I want to come in here a little bit tighter and show you that volume and balance. Right here. So when we're watching price action, and I'm on Twitter and I'm calling specific things to draw your attention to, this is the equivalent of majority of what you're seeing tweets about. Okay, so if I'm looking at, say, well, for instance, this volume and balance right here. Did you see me take a trade there? Did you see me enter it? No. It's something for you to watch and measure order flow. Order flow is how you're reading how price moves from one level to another level.
But yeah, to me, I see this as a liquidity sweep, break of structure for value gap, and I think that is what he's trying to get at. Once again, this is one reason I don't love ICT, because he doesn't really explain perfectly exactly what he's doing. He just kind of talks, but I think this was a liquidity sweep, break of this low for value gap entry, and then targeting lower lows. And so personally, I would take this for value gap and look for an aligned time frame change state of delivery off of it, and then take that lower. That's what I would do.
I outlined between this level here and this level here. I wanted 50% level of that, which was what? 4103.25. What's the low of that candle? You're looking right up here, okay? The low of that candle comes in at 4103.00. Okay, so because I was doing it manually and doing it as it hits it live, I aim for trying. It's that's the part of the game I use when I'm doing my manual exits, because I know I'm invariably never going to get the perfect exit point if I use my limit orders on a specific level, because I've been accustomed to being, unfortunately, permit me to say this without seeing it as an invitation for you to be critical to yourself, but I don't like when I use a limit order when I'm trying to be very, very precise about it. Like I'm trying to get the low or the lowest tick. I'm very, very frustrated when my limit orders don't get it and it goes past it by 3 ticks or just one handle. Yeah. So what I like to do is I like to see when it happens live, and then I try to time it. It's kind of like that game when my kids were little. They used to.
It's annoying when that happens.
Want to go to that Chuck E. Cheese thing, and there was a game it would spin around like nothing's really spinning. The lights would go around like it was spinning, but you have to time it. You got to hit this thing, and wherever it stops, you would get the respective prize, whatever it was stopping on. So I treat it like that. So I'm trying to hit it like as it hits the level I'm interested in. I'm hoping that I'll have positive slippage in my favor and then give me the better exit. And sometimes my exits are very nice. I'm satisfied with them. But most of the time, they're not. Like, I'm not satisfied with them. You look at this and you...
See, that's the thing about exits. That's why I always scale and trail. I always will scale out. It's never all or nothing. I always take partials on the way. Because why does it need to be all or nothing? Why? You can scale out, and if it keeps going, then great. You keep making more money. If you don't, then you can trail your stop loss, and you still make money. So there's no downside. I don't know why more people don't do it. Like, why don't more people trade that way? Like, you literally, you just cut your risk down. So if I take some off at the first, at 1R, some off at 1.5R, some off at 2R, it's just protection, I don't know why more people don't.
What are you complaining about? 30 years of trying to pursue perfection. And it's a compulsive tendency for me to criticize my own exits. Being profitable is not the point. The point is I want them to be perfect. And I'm never going to have that, but as long as I keep aiming for it, what's it going to do? It's going to make that skill set better. It's going to make it better each time. Now, see, I'd like to have more than one contract on still. Because then I could take off one more as it was hitting that low here. This low comes same level 4103 even. So now we have levels like this. See these wicks here? We have the wick there, this wick there, we have a wick here and here. And it's just one single candle. I don't want to see it trade back up into that area. I want to see it remain heavy, because we've had multiple times passing through that range, so it should act as a balanced price range and not want to go back up in here. Because if it does trade back up in there, then it's probably going to have a deeper retracement and come back up into this area, which in my mind is problematic for me getting to my target, which is within an earshot of where it's at now. So when I'm calling out PD arrays, specific fair value gaps, volume imbalances, I'd like to see it do this, I'd like to see it do that. The worst thing you could do is read into that thinking,
so you can use that's a very subtle thing he said, but volume imbalances are PD arrays. So we can take a volume imbalance, which is the same as a new day opening gap or a new week opening gap. We can take that volume imbalance and use it for a flow state. So if we have a volume imbalance, it's a new day opening gap or something, right? We can take that volume imbalance and we can find an aligned time frame change in state of delivery. I think that's pretty cool. He's very, very subtle there, but something that my mind took note of, right?
So the goober out there, that's S&P specialist, Mr. Talker, that I did not fail and blow out 3 times in Robin's Cup. Fools. Every time I mention a PD array, every time I do that, it's simply me giving you a reference point, like I mentioned here on this one, talking about the volume imbalance. Just like I was calling it live in yesterday's market review. I was talking about very specific things. Watch the reaction to price. And what you're doing is you're measuring, does it respect that? Now, what would have happened if it would have traded through it? Am I going to go into a tissy fit and say, oh, and huff and puff and be mad because it didn't respect that PDA rate? No. I'm taking that as insight. I'm reading it, internalizing it, and saying, okay, it went through that one, so what's the next one I have to be watching? Because if it breaks through 3 of them, then I'm
I
probably
got another sub. Thanks,
not
guys.
one side anymore, and my interpretation of order flow is not accurate.
Yeah, once
So if I
again,
have
guys,
stopped-
the whole point of the stream, it's not to be interesting. This is going to be boring. I know that. I know the stream is boring. But the point is I'm going to be watching this anyways. Like, this is something that I would have done anyways. I might as well watch it on stream and commentate when I see something interesting. Because if any single person finds value in that, then it's worth doing it. You know what I mean? So, I'm going to keep going. Here we go.
Reading it, internalizing it, and saying, okay, it went through that one, so what's the next one I have to be watching? Because if it breaks through 3 of them, then I'm probably not on side anymore, and my interpretation of order flow is not accurate. So if I have a stop loss that's likely to be hit, I can do what I did today and neutralize it and not let the stop be hit at all. Now see what we're doing here? We're trading up into this area, which is what I said I didn't want to see it do. Because it's doing this and trading up into here, my eye is right here at the mean threshold of that candle, this up close candle. So for specifics, I can't tell if it's a 5 or not. Old eyes. Yeah, 4107.50. If it goes through that, then I'm probably going to close the trade and be content with it.
Yeah, because if we go through mean threshold of an order block, that probably means we're going to go the opposite direction. Put that in your notes. Keep that in mind. I'm not sure if that means bodies close above or wick, but just what I've heard him say. Guys, I need to shave.
That's that. So
I need to shave so bad. I'll probably shave tonight. But you know when you just kind of get lazy and you're like you're just so focused on your craft where you're like, it just doesn't matter. That's exactly how I am with this beard here. Like I'm just no one really sees me throughout the day. Like, who cares? You know, but I'm probably gonna shave tonight, most likely.
these are the things that plague me as a trader. I'm wanting to see certain things be given to me at my exits. Let's go back down in. Now, what happens if it goes down and hits my level and keeps on going lower? So that's the part that I don't feel frustration for. It's when I'm really trying to key up on, like what I was doing in front of you here, managing and trying to get the levels that I wanted for precision. Closing the trade because it doesn't any longer hold the likelihood of delivering like I want to see it deliver. That rule has served me more and better than me trying to be finicky and try to finesse my exit strategies pursuing perfection.
Like I say, that scale out. It's never all or nothing.
If I'm in a trade and I'm looking for something to indicate to me that I'm probably no longer in a move that's going to sustain and continue to my objectives, this still could do that, and I'm okay with it. Because there's many times where I would have discounted that whole idea of saying, okay, if it goes through that mean threshold here, I'll be willing to sit through it, and it might do what it's doing right here, and then all of a sudden go the other direction. And then I would be really upset with myself that I knew better, but I didn't engage on that. I would be mad about that. But I don't get mad about me doing this, closing the trade because it's now meeting a criteria that means that I have been hurt in the past by not sticking to that rule over something so insignificant as a move from where it was and trying to get down to my objective.
Man, I'm excited for this trading week, guys. I don't know. I feel like I'm getting better at trading. I feel like, breakthrough is hopefully coming. I really do. I really do feel like that. I have, the ways I enter. I know what good liquidity looks like, and past that, it's just that simple. So let's just keep moving forward.
So it looks like it might hit that 40.98.50 level. So reading and interpreting each individual PD array helps you without having to have any kind of like depth of market on the right-hand side. There's ladders and such, or volume profile. You don't need any of those things. You just need to see, does price continuously keep offering resistance in the form of the PD arrays, the things that would tee up a new trade, not necessarily
Volume profile is helpful though, Loki. I'm not even gonna lie. Like I disagree with that.
taking a trade, or that I'm entering on a trade, like the volume imbalance that was mentioned here.
I also want to learn about depth of market. I just don't understand it yet.
Did you hear me say go short now? Some of you probably went short there, and you probably already took profits based on the lines that's already been here, me closing my trade, and you probably mimicked that, and you're doing everything wrong. But every time I mention a specific element of price action and the things I'm teaching you, you're looking at that and seeing how this price react to it. Now, the reason why I'm teaching this, and teaching this way of doing it, is because you don't know, I don't know, which specific model or approach and what is your multiplier going to be. What's the PD array that's going to use continuously more than anything else? Is it really a fair value gap, even though you probably have warmed up to the idea because of what I shared and what people are making money with now? But that might not be the one you settle in on. It might be a volume imbalance. That's your pattern. That's the thing you look for. That's the thing that gets you in a trade. But you won't know that until you do what? Have someone that's going to be identifying them real time, whether it be like this or whether it be on my Twitter feed where I'm calling out the specific candles, saying, okay, note this one, pay attention to this one. That's not an invitation to buy or sell. That's not what that is. Clearly, you can see if I want to tell you I'm going to be in a trade, I did it today. I don't want to do that part because you're not going to learn anything from that. By watching price and seeing which one of these PD arrays, breaker, order block, fair value gap, optimal trade entry, institutional order flow entry drill,
wait,
mitigation block.
Optimal trade entry is a PD array? Dang, bro. Institutional order flow entry drill is a PD array? I thought those were just concepts. I didn't know there were actual PD arrays. Listen to that.
I want to tell you I'm going to be in a trade. I did it today. I don't want to do that part because you're not going to learn anything from that. By watching price and seeing which one of these PD arrays, breaker, order block, fair value gap, optimal trade entry.
That's crazy. We can use optimal trade entry as a higher time frame key level for a flow state. That's so crazy.
Institutional order flow entry drill.
I don't know how you would do institutional order flow entry drill though. Because that would be the same as a fair value gap. But like, yeah, I just probably call that a fair value gap. Because what institutional order flow entry drill is when we barely tap a fair value gap, the very tippy top of it, and then we react off of it. That's what IOFED is. So, anyway.
Mitigation block. Whatever one that you see when I call it out, it will repeat over and over again. The ones that you see clearly, that's easy. I saw that. I was looking at that. I knew that he was going to mention that, referring to myself when I'm talking about it. Then that's the one you're probably most suited for. And doesn't that make much more sense? Learning from someone that allows you to bring something of your own personality, your own comfort, your observations are peaked around a specific element in price action that makes sense to you. Versus me saying, listen, you're only going to be able to trade the fair value gap. This is the only way you can make money. It's too dogmatic.
Exactly.
And sometimes I can come across like that in some of my animated lectures and talking points. But I'm a realist and I understand that that's not going to fit everyone. You're all going to have your own personalities and quirky little things that you bring to your trading.
Exactly. That's why I always trust myself, and I would advise everyone else to do that as well. Trust yourself and your own knowledge at the end of the day. Because, like I always say, no one else is going to be clicking that buy or sell button for you. You have to formulate your trades based on your own understanding and your own conviction of the markets. Don't let other people tell you can or can't do something. Trade based off your own conviction. That's the only way
you have to make allowances for that.
You can be successful at this, because you have to realize 95 to 99% of people are unprofitable. So why are you listening to that many people? There's really only one person you should listen to, and that's yourself and your own knowledge and your trust in your models and that you know how to trade. Ignore all the noise. Just keep doing you, because most people don't know what they're doing.
You have to do so as a mentor, as an educator. It's a testimony to a good teacher that you give the student the opportunity to discover themselves.
LinkedIn ads lets you target the right people.
Like if
Decide to leave.
95 to
Enroll in
99% of people are unprofitable, which we know is the case,
ROTC to become an Army officer.
why are we listening to them? Why are we listening to them? They might say they're profitable, but we know that that's just not true because of statistics. So why are we listening to them? We should listen to what the market's telling us. We should go into the charts, backtest, and use that backtesting information to take trades. We should use it, right? The market is going to be the best teacher. No one else besides the market is going to teach you better than the market could. So let's just look at the market, observe it, and learn how we can trade based off of it, and then take those trades. Stop listening to all these gurus who don't know what they're doing. Just look at the market, observe it, and trade based off what makes sense to you.
Using the concepts, using the principles that you're teaching. So that way it allows them to feel confident in themselves because they brought their own expression, if you will, or personality and internalization of price action, but using the same tools. It allows you as a student to be
Yo, is that the real Wick sauce? What up, man? Are you delusional? What? What do you mean, bro? Am I delusional? I don't know what kind of question is that? Like, I don't know what you're trying to say. I mean, yeah, but also, I'm proud of it. I'm proud that I'm delusional. I'm proud that I, think I can do something other people can't. That gives me power. And I don't care if other people think I'm delusional. This ain't it, Chief. What do you mean, bro? You're wasting your time. No, bro. No, every second I watch is something I gain. There's something else I gain. Whether it's very, very small or not. Like, I watch ICT for an hour, I'm going to get something out of it. So, yeah, I'm a little delusional. But you watch. You watch where I'm going to be. Because in however long, I'm going to really get in my flow. And I'm going to get this. What do you mean? How am I wasting my time? No, genuinely. Explain it to me, because that doesn't make any sense. No, genuinely. Like, seriously, bro. Explain your thoughts, because you're not making any sense right now. I just want to hear you out, because you can't just call me delusional and then not explain yourself. You got to explain yourself, man. Because ICT is truth. ICT is truth. Yeah. Order flow is truth as well. Order flow is truth as well. So is ICT. It's all truth. It's all truth, man. Alright, cool. I'll talk to you later, man.
on the actual development of the model.
It's all
versus
true.
me saying, here's
It's
the
all
only way you
true.
can trade my concept.
Order flow is truth.
That's
ICT is truth.
never going to
It's
happen. There's lots of different ways to do what I
perspectives,
teach.
the same thing.
And each one of you can have a completely unique model using the same stuff I've taught. It sounds crazy, I know, like it couldn't possibly be like that, but it is. And you want to have a mentor that's going to be able to give you that opportunity. And unfortunately, there's so many copy me, mimic me, come here, we'll have somebody that's going to earn your funded account for you, or you don't pay. You've seen those ads yet? Yeah. I think they changed it to, if we don't get you funded, you'll get free signals from the guy that's going to do it for you until you do. Well, that sounds less than a refund, right? Anyway. So, all the things that I was calling out this morning, every individual PD array, that skill set that you're looking for as far as reading price, the days I'm not live streaming, and there'll be times in the sessions that I won't be active on Twitter, and like I didn't want to really do anything today because I feel like someone's sitting on my forehead, like I have a lot of pressure on my sinuses, and it's probably more information you want to hear about, but I just don't feel well. But I know that Friday's tomorrow, and if I am getting ill, I'm going to be more inclined to want to stay in bed tomorrow, and I won't be able to hit the second live stream that I promised you that we would have each week going forward. So here I am doing this one.
Dang, bro.
So
I think that was the real
I'm going
whip
to kind of
sauce.
incorporate a
That
little
kind
bit
of
of
hurts,
review in
man.
this too, so kind of like two birds with one stone type thing, kind of like what I did last night.
I respect that dude. I don't know. I thought he's kind of cool. I kind of respected him a lot. I'm surprised he would even say stuff like that. Like a lot of mad respect for him, but yeah, crazy. He would just pop on my stream and be like, "Yo, you're delusional." It's like, okay, I'm gonna keep doing what I'm doing, and you can ignore me. What do I think about gold, dude? I don't know, man. I feel like that is just like everyone always asks me what I think about gold. It's the funniest thing. It's like it's the go-to question of everyone. What I think is we're consolidating. That's what I think. It's a consolidation. I'd have to go way deeper to really have a good understanding of what's going on. I think we're just consolidating right now. That's what I think.
When we have time away from each other, when I'm not talking
Because
to you
guys,
via
the Wick
Twitter, and I'm
Sauce,
not-
Wick Sauce. If you guys don't know who he is, he's a guy who has this Discord server, and it's actually pretty helpful. There's a lot of interesting stuff in there, and I respect Wick Sauce a lot. But surprising that he came into my server and just told me that I'm delusional. So yeah, I mean, reality is I'm a little delusional, but guess what? That's going to propel me to success. And people don't realize that delusion is actually one of the most powerful things, because when you are delusional, you actually believe you can do something. You believe you can do something greater. Almost no one in society has that in them. Almost no one in society has that belief in themselves. So sure, call it delusion, call it whatever you want, but it's called belief. It's called belief in yourself. And when you can have that, you instantly become an incredibly powerful person. So yeah, sure, I'm delusional, but that means that I actually believe. So I don't care. I do not care. Like I was saying though, I think this is the real Wick Sauce, dude. Bro, whatever, man. Just comes to my stream, calls me delusional. Just more fire to me, bro. More fire to me. Let's keep going. Let's keep going.
I'm not doing a live session.
Crave variety, lamb and turkey, tender and crunchy. Try dog chow, tender and crunchy.
Yeah.
You want to be doing live tape reading when you can. And if you can't, then you do it with old data that you preferably recorded live on your screen. Let it record all day, or watch it on market replay. Which is
Dang,
unfortunate,
there's 70
because
you
that's
guys
the same
watching
as
now.
what
That's a
using
lot
cable
more.
from-
Wow. Dang.
every time it goes up, it just created the equal higher, then it comes off that high. So you don't get that market replay. You get the open, one little change, and then it closes and goes to the next candle. And that's the same thing. So there's like only like 2 fluctuations per candle in TradingView's market replay, which to me, next to nothing, it's good, but it's better to use a resource where you can record your screen and let the chart just paint while you're sleeping, while you're at work, while you're at school, whatever you're doing. And that way you can come back and study it real time. And pause it. When you think you see something, pause it, screenshot that, annotate it, and then let the chart paint going forward again. And that is the best way that you can do. If you're not watching it live, that's the best way of doing it. So if you're, I guess, capable of using OBS, which I'm still fumbling around with, that's what I'm using to live stream. It tends to be like the most popular medium to use.
I
this, but
keep figuring out
I'm not an
OBS.
expert
It's
in
the
it.
funniest
But I think
thing.
it was pretty easy to get to this part, so you can record your screen with that, and it didn't cost anything. You just download the app off of
I
the
mean,
internet.
the ironic part about it, though, that Wick Sauce, he comes into my Discord, or comes into my stream, says I'm delusional, is that ICT is truth. Like, objectively speaking, ICT concepts are how the markets move. So how is that delusion? Objectively, it is the truth. It's just kind of funny to me.
Record. Set your charts up, set them up to record, and just go do whatever you're going to do, whether it be sleep or work. And then when you come back, sit down, roll your sleeves up, and you're in comfort of looking at the charts where you're not distracted, you're not worrying about what I'm saying, and probably maybe do that on your weekends instead of watching the football games and golf. Why do people even watch golf? Like, I get the fact that dudes want to
Bro's
go out there
going on
and,
a rant about golf right now. That's so
Talk it up.
funny.
but I can't get into that. Like, I don't even see that as a sport. But instead of doing those things on the weekend, it's been because you probably
Bro, what
golf
does
and
that have to do
such,
with
but I
trading?
don't even want to jump in my head. But I'm not a big sports fan, and I just think that the weekends are wasted on that type of thing. And if you're doing that this year, you're wasting really good opportunities. Watch this area over here. the remaining balance of that gap between that high and this low.
What up, Denson?
That little tiny area, yeah. That's what I'm looking at.
Deckim.
Because this is for a gentleman I promised I would talk a little bit about today. If we are, let's assume for a moment that you were expecting price to go down to that 41.03 level, okay? And you saw this setup up here.
There we go. He just admitted it, right? This is a setup. Why was this a setup, guys? Why was this an entry point? Well, let's rewind it a little bit. We have a liquidity sweep, break of this low, and a fair value gap, right? And we had draws on liquidity below. That's what these lines are, right? Liquidity sweep, break of this low, fair value gap. So he just confirmed that this right here is a valid entry, right? Sweep, break of this low here, fair value gap, draws on liquidity. You see that? Entry, exit. Sweep, break of this low, fair value gap, entry, exit.
Pause it between the previous candle's low and the next candle's high. There's no overlap of this candle up inside that range until we get to here. So that little shade area that I put on my charts that my students do now too, that little area is where, if you were looking at a paint roller, and the paint roller applies paint to the wall, rolls down. This little area is like a pocket of where the paint wasn't really thick. It wasn't evenly distributed to the wall, and the wall would be like this chart canvas. Okay, if there was no charts on this at all, it would be a blank canvas, like a wall, before the painter puts the roller and delivers the paint on the wall. Well, as it drops down like this, from here to here, this is where, like when you take that roller, if you ever painted anything or watch a painter use a roller.
No, he's exactly right, because like what he's saying is, as we deliver lower, this is inefficiently delivered because we gap through here. So the market's going to want to refill this. Damn, the comment is crazy, but I'm listening. Ice T is the real deal. It is, bro. It 100% is. I don't know, like, maybe you just have to be just, really oblivious. But if I go in the chart here, tell me that ICD concepts are not applying to the chart. Tell me that ICD concepts are not influencing the chart. Because let me tell you something, man. They are. 100% they are. Draw out any volume imbalance on the chart. Any volume imbalance. Literally any one. Tell me the market does not respect that. Right? Draw out any volume imbalance. Tell me the market doesn't respect that. ICT not being truth. That's the stupidest thing. That is the stupidest thing. ICT is the complete truth, and anyone who says otherwise doesn't know what they're talking about. Draw out any volume imbalance, man. Any volume imbalance, right? The market remembers these volume imbalances. The market remembers fair value gaps. It remembers these things, right? I mean, literally just look at like a weekly fair value gap, for instance, right? If I draw out a weekly fair value gap, tell me that this gap right here was not respected. Tell me that this weekly fair value gap was not respected, right? It was. I don't even feel like there's any point in arguing it anymore. It's objectively the truth. It is objectively the truth. It's just so stupid. Like, there's really no point in arguing it. Like, anyone who says it's not the truth, like, it's not even worth my time to try and explain it to them. Because obviously, the market refers back to these points. Obviously. It's, like, not even worth my time. It's like, okay, if you don't believe in it, that's on you, man. Because you're the one missing out on all this opportunity. You're the one missing out on this potential. Like, I don't really feel bad because I'm trying to help you. I'm trying to basically explain to you that ICD concepts are how the markets move. So, like, if you don't believe in it, then that's fine, but that's just on you because I'm trying to help you. I'm trying my best to explain to you the market reflects these concepts, right? Because it's the truth. It's order flow. It's how the market moves. It's gaps, inefficiency. Inefficiencies are gaps in price action. If I measure out literally volume profile Where is the gap in the volume? It's right here. This is the gap right here. This is a gap. It's true. ICT concepts are just as true as order flow. It's the same. Okay. It's okay.
Apply that roller
Exactly.
to the wall.
I have
The
to use
paint
the
is really
bathroom
thick.
again. I don't know what's wrong with me, bro. Alright, I'm gonna keep watching it. Guys, I will be here for however long. I genuinely just come into the market looking to say, how can I get better? How can I improve? If that means I have to watch the entire 2023 mentorship, then I will. Because, you know what? And like I was just saying, I would be watching this anyways. I might as well stream it. Makes things more interesting, you know?
It's ample. It's delivered abundantly to the wall. And as that roller continuously rolls in the direction it starts rolling in when you first apply it to the wall, eventually there'll be small little porous little pockets where paint did not distribute to the wall. So the surface of the wall will have what? Little spots.
That's one of the
And that
best
is much like-
analogies, though, because if you really think about it, that's exactly the case, right? We drag it down. Where we go down too fast, the market's going to remember that as an inefficiency. It's going to remember that as a gap. It's going to want to rebalance to it. It's a really good explanation, to be honest.
Like what we're seeing here, where the paint comes in, it applies to the wall, keep going down. But now if you look back, there's a small little area here where, in an ideal world, the painter would take that roller, apply more paint to it, and then do what? Roll back up over top this little area and this little area. And then he can move on to another area of the wall where he hasn't painted yet. Does that make sense? To me, that makes sense as an analogy, because if that would have been taught to me when I first learned how to read price action, it would have made a whole lot more sense versus oversold. You know, what swing high is the real one with divergence, and what trend line do I use? What's my moving average settings? You know, what RSI settings should I have my set on? What do I use? MACD, histogram?
It's all just the
use
market
it
running
across
through
overs.
old highs and old lows
All the stuff that was a waste of my time.
and running to gaps.
These are the things that would have been more beneficial to me, which
That's
is the
all
nuts
it
and bolts
is.
of price action. So, looking at where the market can go back in and do what? Replenish paint to the canvas. Put more paint back in an area where it needs it. So when you look at price action and you identify these little areas like this, you think it's going down here. See, the painter needs the paint down to this level here. To finish the job, the price run, the algorithm will want to go down there. But it has to do what? It has to deliver the market efficiently. Otherwise, it's a straight line like CPI. When that market data comes out, what happens? The market's just doing nothing until CPI number. All of a sudden, you have a vertical line. That's it. It's all you have is a vertical line that keeps expanding. You can't trade that. You can't do anything with it except for regret that you were in the trade. It's not going to respect your stop loss. It's going to laugh at you. It's going to literally make you feel like you're a fool and you should have never done that. And you should feel that way because the CPI is an absolute freight train. Like you're literally trying
CPI.
to play chicken with a freight train. It's coming right at you.
Don't mess
Hit me.
with
It will stand on those tracks. It will do that
randomly
and drag
gambling
you
on
for miles
CPI.
okay, until your account's gone or you lose your sanity. So you have to know where price is going to go. Much like a painter, when he looks at that wall, wherever he's going to start with, whether it be the left side of the wall, the uppermost part of the wall, or the lower part of the wall, wherever he starts, okay, that's the point of inception. When he puts that paint on the wall, now his job's begun. Now he has to paint the entire surface. Just watch anybody. Just go on YouTube, say painter using a paint roller, and you'll see exactly what I'm talking about in an analogy where, let's assume for a moment you're starting on a wall in the lower right-hand corner, and you apply the paint. You put on the wall, maybe at the top end. You start there instead of the bottom. Top end, you apply the roller and you drag it down to the wall. The first 12 to 18, 20 inches of the surface of the wall has a beautiful delivery of paint. It's thick. There's no pockets. There's no porous little parts that got to go back and roll back over top of immediately. You just roll until what?
It's a really good analogy.
You feel like you're not getting any paint coming out anymore. So what does the painter do? He rolls right back over that same pathway to gather excessive amounts of paint that's not necessary to be
and fill it
in that same area. So it's going to collect more paint, evenly distribute any areas that have these little pockets where paint hasn't been distributed. So it reapplies in old areas. Yes. What does that mean? In this area here, paint was, or price was offered both directions. So from this candle's high and this candle's low, the next candle opens up here. It trades back down and runs over top of what this candle's low was. And then it rallies all the way back up to this point. So it leaves what? It leaves this little area as a hole or a pocket where price did not go back over, where it went down in between this candle's low and this candle's high. This is inefficient. This right here is an inefficiency in price delivery. Price operates on a price continuum. Okay, it's a efficiency continuum, meaning that the market has to continuously offer fair value. And fair value is evolving all the time throughout the day. And every time it creates an inefficiency like this, it will seek that and go back up into it. Now, it will over-deliver just like a paint roller will. The painter will roll back over areas where it's already had paint delivered to the wall, right? You've seen that. There's no way to do what? You can't just paint one little pathway on your wall and then come over to the left a little bit and come back down and not overlap. You want to overlap. And that's exactly what's occurring in price action, because look at the range in between here. This candle's high and this candle's low. The market has traded down and it also traded up here. So in this little area here, on a micro scale, this is a small little balanced price range. When the bodies of these candles came back up into this fair value gap, identified this little area right there in price, that little segment right there. Look where the bodies go. See where it stops? The closing price on this candle is 4116.75. What's the low of this candle? 4116.75. That's perfect. That's a signature that shows you the market's algorithmic. Retail logic, nothing out there says trade with these levels like this. Because if they did that, if they knew that, they would tell you where to put trend lines at. Whereas right now, up until this moment at the time I'm talking, nobody tells you what specific price levels to drop a trend line on. If you ask 1,000 different traders, say we had a live, like a session where I was in front of a stadium of people. I don't foresee me doing this, but let's just, for the sake of argument, say that's what we're doing here. And I said, okay, everybody raise your hand if you know how to use trend line. Of course, everybody's going to raise their hand. So yeah, this is what we do. And say I threw out a beach ball, 3 or 4 beach balls, and we bounced around until the music stopped, and whatever the music stopped, whoever had the beach ball in their hand, they get to come up on stage with ICT, and I said, okay, here's a chart. You all had the same chart. You can't look at each other. You can't copy. Draw the trend line that's most important to you right now. What do you see? And they're all going to be different. And you wonder why retail traders are inconsistent. They have no premise behind finding consistency because they're constantly doing something different and not maintaining a rigid approach with rule-based ideas. My rigid approach to rule-based ideas are my PD arrays within the context of market structure, within a bias that's been derived by a narrative, which is also leaning heavily on a higher time frame premise, which is a weekly chart. I'm doing the same things all the time, but the things I'm doing are very specific, like knowing a very specific level. This candle's low, 4116.75, happens to agree with the closing price on that candle. What's the next candle's body? It's the open. It's the same thing. The open price is 4116.75. Now, just like that paint roller, when it delivers over top of old areas where it has delivered paint, watch the painter, they overlap over it. Why do they do that? It makes sure there's no seams. It buttons up everything. It completely smooths out and feathers the edge of an old run on paint being delivered to the wall, and then you apply it back over top of it just a little bit. Kind of like when you cut the grass, the lawn. You cut the grass, you come back over, and you're not trying to line up where the edge of the last pass with the mower was. You're going to overlap it a little bit. Why? Because you don't want to waste your time going back there again, right? Well, that's why the algorithm is coded this way. It wants to efficiently go back and reprice. So you'll see these little areas here, which I'm going to borrow this now.
That's a good analogy.
This area here
as well.
is where this candle's low. Let me take it away a little bit further, you can see the difference. So this candle's low. Right here, this candle's low, and this candle's high. High and low. It's passed back and
He's not drawing out a fair value gap. He's drawing out something else. Low to high of these. This, guys, pay attention to this really closely because this might be actually really valuable.
further, you can see the difference. So this candle's low. Here, this candle's low, and this candle's high. High and low. It's passed back and forth between that shaded area, both directions.
So, once again, low, high, low. So this is a balance. This is both directions have been efficiently delivered.
So when we have this pass back up into the actual fair value gap, that low to that high with this one single candle here, my eye is trained to look for that in price. I'm teaching my students to look for that too. You're going to try to enter the candle here. When we have this pass back up into the actual fair value gap, that low to that high with this one single candle here, my eye is trained to look for that in price. I'm teaching my students to look for that too. You're going to try to enter in that. Where? Going short at that candle's high or the midpoint in between. You can, if you really want to try to be a precise, fanatic, you can try to get the fill at the high end, but many times I've tried to do that and it doesn't go there. It leaves a small little portion open. In this case, what I'm illustrating here is the efficiency of the algorithm coming back into an area that's already balanced, but it's covering up and overlapping an area where it's already traded to, which is why you're getting this and this.
So yeah, this is right here. This has been balanced because we've gone down, up, down.
That's not an error. It's not a deficiency on precision either. It's just making sure there's no seams. Everything's been offered efficiently. But the bodies tell you the real story. This is where the damage is done to wicks. But the real narrative and what Price is doing is you have to study the bodies. That's where the real storyline is.
So,
and you can see how it comes.
I'm going to drop some sauce right now. So this signature and price right here from this low, we go close and higher and then close. When you see these overlapping wicks, what is this? On the lower time frame, this is an order block. So if this was the 1 minute chart on the 15 second, what would this be? This would be a 15-second order block because it'd be low, high, low. So in the 15-second chart, this is an order block. So these are called hidden order blocks, also known as hidden interbank price point objectives. So anytime you have a low to a high, this is a hidden interbank price point objective. It's called a hippo. I never have talked about this on my channel before. Just a random stream right now where I'm talking about this randomly. But anytime you have this signature and price where you have a fair value gap, and above the fair value gap you have this here, this wick to this wick, right? You see that? Jake, I sent a pic on Discord. I'm curious to see what you think of it. Yeah, for sure, I'll look at it. But anytime you have, right, open, low, close, open, high, close. You see how this wick to wick on the lower time frame, that's going to be an order block. It's a hidden order block. It's literally called a hidden interbank price point objective. I figured that out from Hoppy's book. You guys should go watch. You guys should go read that book, but it costs money. But yeah, just like PD array, like anything else, I'm pretty sure, but basically just the order block, right? This is an order block, but it's a hidden order block.
Right up into there and stop.
I sent a pic on Discord. I'm curious to see what you think of it. Yeah, I'll look at it. Let's go. I need to get rid of this because this the request the journal is going to be in the Discord server. So I'm deleting that. Someone's in the voice chat. That's actually kind of funny. On the group. Comment your answer below. Option A, option B. Where are you looking for buy? Personally, I'd be looking at option B because this is a breaker and a fair value gap. So I would anticipate this to hold because this is also a chain state delivery. That's what I would say, right? I think the market would probably not reprice down to option A, and if it did, then it'd probably be a red flag. But we've also kind of, started to expand higher, so we might not even go to option B. We might just continue higher. That's probably what I would say. But I like option B because let's say this was a 15-minute PD array here, right? This would be a 1-minute change state delivery, so I'd like possibly this 1-minute change state delivery. But yeah, Hyper says B. I say B, but
stops. This part of these wicks, okay?
Look at this. Look at how ICT marks out this fair value gap, guys. See how he marks out the fair value gap as not from here to here, but from here to here. That's because conceptually, this is where the gap is, right? Why are we marking out a fair value gap as a mechanical signature where it's wick to wick, right? Where's the true gap? Where's the true imbalance? Where's the true gap in that paint roller? The true gap in that paint roller is right here. See how we reprice to that paint roller? We reprice to that gap in the paint in the wall. This is a fair value gap here, but this to this is the true inefficiency, and we come back up and redeliver to it, and then we continue lower. So pay attention to that. Yeah, I said option B as well.
Your trades are going to have that much drawdown. If you're entering in here in consequent encroachment, okay, in this range here, we have what? It's balanced. It's done both passes. This candle went down to this low, and then this candle opened here and then went up this much. So I'm not worrying about all this here. I'm saying the difference between this candle's low and this candle's high, those two ranges present a range of price action that has, in this interval of, 4 minutes? Each candle's 2 minutes? In 4 minutes, price is going back and forth in here. And you're going to hear other people say these lower time frame charts are noise. They're not noise.
They're not.
It's telling you
it's very precise
what price is doing. Whether you're looking at this chart time frame or if you're looking at an hourly chart or a daily chart. If you're staring at a daily chart,
I literally saw someone do that with FEG, not draw it like how we do unless it's like that. Exactly, man. Like, conceptualize the fair value gap. This is a true gap. This is the mechanical version of a fair value gap, but the true gap is going to be from here to here. This is the true imbalance. This is the one we care about. No, yeah, I see the goat for real. Absolutely.
The market's open at 9:32.
But think about it, right? It makes a lot of sense. What is a fair value gap? It is a gap between where we, like the paint roller analogy, right? We roll up, we roll down, we roll up, we roll down. A fair value gap is literally where did we have a gap in where we rolled up and where we rolled down. We roll up, we roll down, we roll up, we roll down. We were up, we were down. So why would this be a fair value gap? That's not the true gap. The true gap is the gap in where the paint roller gapped. It's from here to here. This is where the market's going to refer back to. Not this thingy that we call a fair value gap, but this. Bang. Right to that imbalance.
5 o'clock when it closes for our hour session of dead time. If you simply watch price on that daily candlestick versus us watching it on the lower time frame, is price doing anything different? It's doing the same thing. You're doing the same thing, but you're using the benefit of a time-based chart. And you're going to get goobers out there going to tell you time-based charts don't work. Time-based charts don't work if you trade retail logic. That is true, but I don't trade retail logic. We don't trade retail logic. I'm teaching you how to use time-based theory to identify what the market algorithm.
What's the best ICT mentorship that he talks more about psychology? I don't know if there's one he specifically talks about psychology. There's one he talks about what I would do if I could start from scratch or something like that, or what I would do if I was just starting. I think something like that. I think that one's the closest to him talking about psychology, but I don't know if there's any ones in specific. He just talks about psychology. I could definitely be wrong, though. I could definitely be wrong.
Okay? There's only one algorithm. That's the price engine that delivers this. You're never going to convince anyone, especially in this community, that these things here are being met because buyers and sellers that use retail logic all come together, and through sheer coincidence, it just happens to be perfect. It's no.
Yeah, that's
no.
the stupidest thing.
I don't even want to entertain that anymore. When I see people comment and say that stuff, I immediately mute them. I'll never see another comment from that person again. And you're not being blocked from my Twitter feed, but I just don't want to hear from you because you're literally closing your eyes, putting fingers in your ears, and then you don't want to hear it. Okay, I don't want to see your nonsense because to me, all it's going to do is trigger me. I can't stand seeing people deny the evidence laid in front of them. It's right in front of them, over and over and over again, but they won't appreciate it because it flies in the face of whatever they believe is the real things. And the things that they're holding on to probably isn't even this precise, which to me is madness. But I'm becoming a little too dogmatic here. Let me dial it back. So we have this overlapping into this area. What is this entire range? From this low to this high right there. Watch this. There's our fair value gap. Now, if you know that the algorithm is going to do the same thing you're going to do when you cut your lawn in the springtime when the grass is growing, you're going to go out there with your mower, or the guy that you're going to hire to cut your grass for you like I do.
And make videos on it. I always listen to it while I do my pre-markups. Make videos on what? Wait, make videos on what?
I ain't cutting shit. The overlapping of that mower, where you just pass through, you're cutting the grass down, the first pass, then you're going to turn the mower around, or they're going to turn the mower around, and they're going to lay their wheel over top of what was already cut. So that way there's no seam, right? So when you make a new pass, you're always cutting through, and not leaving that little segment of grass where you gotta go, oh, I left the mohawk. Gotta go back in there. My sons, the few times I've asked them to do the lawn, they hate it because they know my obsessive compulsiveness is gonna force me to go to the window and see what they're doing. And I'm waiting for them to leave a little mohawk in the grass. And as soon as I see it, I'm out there. Hey, go back and get that. And they flip out because they thought they were gonna get away with it. But you can see it. You can see it in the grass. You don't want to leave that. So that's what these little things are here, preventing any little mohawks in the lawn. I know I'm giving all kinds of analogies, but this stuff makes sense to me. If it doesn't make sense to you, then, I'm sorry. But if you look at that balanced price range between this candle's low and this candle's high, there's our target right there. Screenshot that. And that's the level I told you here, too.
So, once again, hidden order block. That's what he's not saying. This is a hidden order block. He's not saying it, but it's true, right? From wick to wick, that's a hidden order block. He's not talking about that. But he's basically saying we go from the hidden order block down to the low. Next Gen ICT is a YouTube channel that does it, and Trading Genius.
Analogies, but
I'll have to check him out.
This stuff makes sense to me. If it doesn't make sense to you, then, I'm sorry. But if you look at that balanced price range between this candle's low and this candle's high, there's our target right there. Screenshot that. And that's the level I told you here, too. Pretty cherry picked, isn't it? ICT, you slay me. The range between this low and that high, if we measure that and you get
Yep, ICT motivational videos where they just have a pic of ICT face auto captions while ICT speaks. Dang, I'll have to check them out. Of course, if all that guy's videos are good, I'll check them out. Next Gen ICT. I'm going to write that down.
Midpoint level, that is mean threshold. Why? Because we're measuring candlesticks that have bodies. If it were a gap, like this fair value gap, the midpoint is consequent encroachment. Consequent encroachment is what is permissible within a range. Let me make this a little bit.
Wait a second. What is he talking about consequent encroachment?
That is mean threshold. And that high. If we measure that and you get a midpoint level, that is mean threshold. Why? Because we're measuring candlesticks that have bodies.
He's even talking about mean threshold of this hidden order block.
If it were a gap, like this fair value gap, the midpoint is consequent encroachment. Consequent encroachment is what is permissible within a range. Let me make this a little bit smaller. See if we get that 9850 level I mentioned on Twitter. Because I feel like a peacock if it hits that. My wife's going to see me doing the Mick Jagger walk. Got my moves like Jagger. Don't worry, I'll come back up to that balance price range in a minute. Some of you already figured out what I'm going to go and talk about in a second. Come on. All right, we'll give it time to cook. So over here, we have 4,117.50. It just so happens, randomly, with buying and selling pressure, being as it is,
funny
completely random, how far can it overshoot this fair value gap? Well, what's the midpoint between this candle's low and this candle's high for that balanced price range?
That's crazy. Midpoint of the hidden order block, guys. Remember that. Midpoint of the hidden order block. Did I watch core content? I've seen 10 months of it. I have not finished it, but I'm almost there. I just, I want to watch this right now.
4,001.
But, guys, look at that, man. Perfectly hit the midpoint. You know what's funny, Jake? I've never in my life, since I started in March, not even looked at one ICT mentorship. Yeah, man. Honestly, that was me too. Like, because it's so boring and so hard to watch. But you get to the point where, like, you just kind of wonder, like, why haven't I watched them? And then you just sit there and be like, how bad do I want it? I want it pretty stinking bad. So I'm going to sit here and watch the entire thing, man. So, yeah, that was me too. Because once again, I'm 2 years in. I hadn't watched the ICT mentorship for, like, probably the first year and a couple months. I'd watched Dodgy's mentorship, but I hadn't watched an ICT mentorship. And to be honest, I'd probably advise people that it's most likely a waste of your time. If I'm being honest, most of it's a waste of time. But the benefit is occasionally, like on rare occasions, it's not a waste of time. It's rare, right? But sometimes he'll just randomly say something like out of nowhere, and it's super, super valuable. And so that's why I personally do it, because, I value that, because then hopefully I can help other people and not have it be so complicated. So I'll put myself through this to watch all this so I can hopefully make it easier for other people.
117.50. What's the high on this candle right there?
I'm not taking notes. I am taking notes. I put my notes in my phone. Anytime I think of something interesting, I take a note. But also, I mean, you're going to have to remember everything anyways. So you might as well just put it in your head and remember it.
4,117.5.
Nice, Haney. Nice.
0. Whoops. So it takes more of... Well, what's the midpoint between this candle's low and this candle's high for that balanced price range? 4,117.50. What's the high on this candle right there?
I feel like every time I want to hear Ice-T's voice, I feel like watching 2023 or 2024. I know, right?
4,117.5.
I mean, here's the thing, J-Trades. At the end of the day, yeah, notes are helpful, but in my opinion, you should have all that stuff in the back of your head. That should become so ingrained in your head that you don't even need notes. I do take notes and put them in my phone, but I think at the end of the day, that's your notes. You're not going to be able to stare at your notes when you're live trading. You got to have that stuff in your head. So I personally think you just got to remember it, man. I haven't watched 2024 yet, so I don't know.
Midpoint between this candle's low and this candle's high for that balanced price range. 4,117.50. What's the high on this candle right there? 4,117.50. Whoops. So it takes more of a religious, faith-based madness to believe that all these things that I'm teaching you, okay, all these things that I tell you to go in and look and see if they're really in the market, if they're really in the marketplace, it begs the question, how the hell does it keep happening?
That is the realest thing. How can you believe that it's random when it's hitting levels perfectly to the T? How can you possibly believe? It takes more faith to believe that it's random. It takes more faith to believe that this is random nonsense than it does to believe that it's perfection. And I'll never understand people who don't think that. I'll never understand it. It's not practical to try and memorize everything. Notes are for reflection and rememorizing. Okay. I appreciate your advice, bro, but I'm going to listen to myself. I think I'm fine. Heard people say 2023, but 2024 more algorithmic. I don't know why that means, but that's what people say. If you watch 2022 Mentorship Hyper. Yeah, bro, I trade market maker models. You're like trying to tell me the obvious. I already trade. That's what I trade. I trade flow state, which is market maker models.
How does it keep happening? See, these are the things. I was sitting in my aunt's bedroom after working 13 and a half hours a day, doing 45-minute commute in 20 minutes, speeding. I guess I was breaking the law. Never wore seatbelt
Wait,
either. And
I want to
wear
hear
one
about
still.
his aunt's bedroom. What?
See, these are the things. I was sitting in my aunt's bedroom. Look and see if they're really in the market. If they're really...
This is the realest thing, though. Like, how can the markets be so precise and have it be random? It takes more faith to believe that than it does to believe ICT concepts. Genuinely.
in the marketplace, it begs the question, how the hell does it keep happening? How does it keep happening? See, these are the things. I was sitting in my aunt's bedroom after working 13 and a half hours a day, doing a 45-minute commute in 20 minutes, speeding. I guess I was breaking the law. Never wore seatbelt either, and I rarely wear one still today. But
I love ICT sometimes.
I would sit in there and I'd look at these charts, and I started looking at these things and these turning points, and I'm like, what happens continuously all the time at these turning points? And I started seeing this in the bond market, in the S&P market. And then I said, well, let me see if it occurs.
Yeah, I'm a grinder too, bro. I'm gonna be watching. Like, I'm watching this whole thing, this 2023 mentorship. I'm like 26 episodes in now. I don't care. I'm watching. I'm gonna watch every. I want to honestly get to the point where I watch every single. I want to get to the point where I'd honestly just say I can say I've watched every single ICT video, because at that point that gives me so much power. If I could say I've watched every single ICT video, then I'd be like, oh dang, like he's genuinely legit. Like he genuinely has done his homework. He's studied everything, and I implement my own conscious thoughts into the market. Like, I don't just blindly follow ICT. I follow what makes sense. And I think when you do that, that becomes very powerful.
In the currency futures, it was. It's there. So I said, okay, I need to know. Did I see something I'm not supposed to see? So I took all of my money. Every time I made new money, I would buy more books and more courses and more books and more courses. And for the yahoos out there that say that I have rebranded things, old terminology, rebranded with new terms, this stuff is in no books. No other author ever talked about it. It's never been touched on until I've said it. Which is the reason why I challenge every one of my viewers. I'm just going to hit our target here. Well, there's I told you so moments. Oh, look at that. That's so random.
It's just random, guys.
Acceleration
It's
down.
random.
I told you we'd probably get a big down day.
How could this be random? Measure the midpoint of this hidden order block. Bang! How could that be random? Because it's not. It's not, man.
Later in the day, if we get through that new week opening gap. So I had a lot of fun. I'm not beating my chest. I'm just thumbing my nose at people that like to say I can't do this, that these things don't work, and it's cherry picked. And I had a small win when I had the win of the day. I call everything you've seen it. It's here again. I want you to learn, but if you can't get out of your way of your own ego and your pride because you don't know this and you can't do it yet.
Like, I kind of want to take a break. It's been so long. But I would want to do it at the end of an episode. Let's just keep watching.
And I'm probably killing your business because you can't sell your stuff anymore and you're getting on your live streams and losing $15,000 of fake money by calling it live. I get it. It's a struggle point for you. But I'm not trying to be your adversary. Just learn from me. You don't ever have to mention me. I just want to see you do better. And you don't have to communicate to me. If you want to keep it in private, that's wonderful. I just want to see all of you do well and not get hurt, because these markets are not random. They're not. But back to that balanced price range, and we'll see what we get later on. I'm going to focus up on here. Some of you are thinking, damn it, I shouldn't have closed the trade when he did. There's a lesson in there. So it nails that level perfectly. Then it moves lower, and it leaves this area here. One more time, it trades to it, above it. One more time,
again,
it shows
remember that video, that short form video I made about reused for value gaps? We have this for value gap in price. Just because we used it once and twice doesn't mean that we won't use it a third time. Look at this for value gap. We use it once, twice. We use it again a third time. And this fair value gap stays valid this entire time. Guys, fair value gaps don't lose value unless they're like super obviously inverse. In that point, you know, it's an inverse fair value gap, right? So guys, remember that fair value gaps stay valid this whole time, and they'll be reused. And actually, the more times that these fair value gaps do get reused, the higher probability your trade becomes, because eventually the market's going to expand away from it.
It's seamless.
You too, man. You too, J Trades. Appreciate you, man.
And then it breaks lower. One more time, it trades up. What is it going back up into? Consequent encroachment of this gap, midpoint. Hits it. When you see that, as soon as you see that, you're thinking, okay, this is the last time it's going to do it. Why? Because this has already went up to the midpoint of this area here. And why? Because your targets, your terminus, the levels that you're expecting and looking for, that's where it's going to draw to. Just like when you're sitting down to figure out when you're going to cut the lawn, when you start making that mower pass over top your lawn, you know you got to keep doing it until you get to the end of the lawn. Well, the end of the lawn is down here, so you got to keep constantly doing what? Apply the paint to the wall or keep pushing that mower until it goes to completion. The completion is time and price. So we're in that last hour of trading, 3 o'clock hour. The market's delivering into our objectives. The one I gave you on Twitter, we already hit it, and it went past it, that's fine. But when it goes up into this level here, you're anticipating it to do what? Never go back up here. It has no need to do that. But what can it?
Let's rewatch that part.
But when it goes up into this level here,
bro, I don't care. You can do whatever you want, man. Look at me. I'm in a hoodie in in the room of my parents' basement's house, watching ICT with a little dinky light, bro. Do you think I'm gonna care? You can do whatever you want, man.
you're anticipating it to do what? Never go back up here.
Wait, let's pay attention to that one more time.
It went past it, that's fine. But when it goes up into this level here, you're anticipating it to do what? Never go back up here.
Why?
It has no need to do that. But what can it do? What's permissible? It can go back inside this fair value gap. Because why? This is an old inefficiency in price. Whereas the difference between this candle's low and this candle's high here, this is efficient. What makes it efficient? It's traded both directions in between this candle's low and this candle's high. So price is effectively permitting balance in order flow in price delivery. Price delivery is every time there's a new price tick and there's a new fluctuation in price action, that's delivery. That's the market being presented.
Bro, I can't wait for this trading week. Like, genuinely, I feel like I gotta be like close to the best I've ever been in trading now. Like, I'm getting to the point where I'm like genuinely, I should be able to catch hopefully some really good trades. But I don't know, man. One day at a time. I'm not expecting anything, but I do hope that this week ends up being pretty good. Hopefully, I'm just gonna try my best. Is all I'm saying. Oh, guys, yeah, I'm excited.
Valuation on an asset. So what we're doing is we're measuring how often that delivery of price, how many times within a range specific to time, which is these two specific candles here, how many times has it passed through the same range of a specific number of prices? Meaning that this candle's high here comes in at 41.18 and a quarter, 0.25. And this candle's low here comes in at 41.16.75. So between those two price points, price went down, and then this candle here opened,
once again, went
up.
What is that? Order block, right? Low, high, lower, low. Order block. That's what he's not saying. He's refraining from saying it because it'd be too much sauce. This is an order block. Low, high, lower, low. This is an order block. Hidden order block.
It went down.
Hippopotamus.
And so this
hidden interbank price point objective.
Entire range between
Hoppy. Learned it from Hoppy. Hey, yeah, dude. Appreciate you saying thanks. I'm glad hopefully it's helpful, man. Because I'd be just watching this on my own. There'd be no point. Like, I might as well just live stream it, right? See how it's going lower and lower in terms of highs? Exactly. Every single high is a failure swing. So we're just, we've essentially high resistant conditions, kind of. Because we're failing to break the high. We fail. This one does break the high, but, it's in the grand scheme of things, it's a lower high.
High and candle low is balanced. It can go back up into the midpoint of that. That's normal. I allow for that. In my analysis, when I'm reading price, I allow for it to go up halfway.
So what I'm going to do probably is I will finish this. It's got about an hour left, which is really only like 40 minutes because I'm on 1.5 speed. And then I'm going to be done for the day. I've watched this for so long now. Notice after 3 candle pattern drives, it falls. Notice that, right? Thanks, man. Appreciate it. Appreciate it, Cody. A 3-candle pattern drive, it falls. Yeah, that's absolutely true. Simple, basic market structure.
It's rare that it will go all the way back up to the top of a balanced price range. It can. It just means that I'm probably getting ready to bail on the trade if I'm using that as a point of interest to measure if these PD arrays are able to stave off an advance or a retracement against my trade. So I'm treating these PD arrays like you are being taught to use support and resistance, but never getting the work right. Whereas the algorithm is going to go into these specific little signatures and price action that cannot be hidden from you. It can't hide it from you, folks. That should be
I love how
exciting.
Emotional he gets.
It's not like they're going to be able to go out there tomorrow and turn off candlesticks. We all look, are you going to stop using a clock? Raise your hand in the audience right now if you're going to say, the hell with this. I'm not using a clock. I'm getting rid of my watches. I'm never going to look at the time anymore. That's absurd. And that's the first primary function of what price does. It follows time. It does things at specific times.
That's pretty cool.
Then it delivers price based on
time then price,
the efficiency and the price delivery continuum. It has to continuously offer fair value. If the market runs too quick one direction and it goes down like it does here in this one candle, is it fair? And it's probably not the best term of using for describing this, but for the sake of making it easy to understand, because fairness is not really the goal.
Exactly, right? We deliver too fast, so it's not fair value, so we have to retrace the fair value. Hand raise. Yeah, yo, what's up, Haney?
Here for these markets, but if the market drops down like this and leaves this little separation between this candle's low and this candle's high, there was no overlap, no other candle after this candle closes, no other candle printed within the price range between this candle's high and that candle's low. In between these three candles, it's that small little segment of price action creates that little pocket, that little porous price action hole. It needs to be filled in. Okay. Think of it like a pothole on the road. Okay, you're going down the road. Hey, boom! You just blew out your front end alignment. You're gonna call the state. Hey, you so and so's. I just tore my thing up. Well, where is that? With my marker. Let me go back. I gotta drive back up to it. There's a mile marker, and then there it is. Silly little analogies, but I use these types of things to teach my kids. And I tried to explain every possible scenario.
Analogies are the best way to explain things.
To where it makes sense to her. She just thinks it's a video game, so whatever. But the fair value gap can be revisited entirely.
There we go. That video I made on reused fair value gaps. Bang. You have to get an hour and 8 minutes into this video to hear him say it, but he says it right there. The fair value gaps don't lose their value. They stay valid. Fair value gaps hold their value throughout the entire time that they're fair value gap until, they're obviously inversed, right? But this whole time, this fair value gap stays valid and we can revisit it. I don't know. I got excited.
And that's what we see here. Notice that these wicks
Because I
straight up
just
into
made
that
a video on that.
same old inefficiency. Hits it here. All this is
I thought that people complained he's hard to listen to. Dude, he is hard to listen to. He's terrible to listen to. But, how bad do you want it? I want it pretty bad. I'm just, if I had to watch every single Ice-T video, if that's what it took, I would do it, dude. I don't care. Because once you get trading, you are essentially, you're set for life. Why would you not? I mean, people spend 10 years to become a doctor. Why would I not watch every single Ice-T video? Trading is probably going to pay 3-4 times as much as a doctor would. Why would I not watch every single Ice-T video out there? It's just so dumb to me. Why would I not do that? It's just boring. That's all it is. Even when when it inverses, then you're looking for it to hold in the opposite direction. So once we inverse this, then we're looking to backtest it and continue higher. So the inversion, after we inverse it, we're looking for backtest. Yeah, it's kind of soothing, to be honest.
a reclaimed fair value gap.
Reclaimed. That's the word. See, this is where I'm going to take notes. So when I said reused fair value gap in that video, technically it's not reused. It's called reclaimed, but you know what I mean. Same thing, right? Reused, reclaimed, whatever. Reused. Okay, I'm going to write this down. When I said reused FVG, I meant reclaimed. And meaning the fair value gap can be used many times. Meaning a fair value gap used many times over and over. Exactly. I would just call it a reused fair value gap. Reclaimed, reused. Wah, it's same thing, man. Who cares? But like I said, guys, I lost my train of thought, but he's definitely, like, I don't know why people complain that much. It's genuinely pretty chill.
Claimed means it simply went back to it and treating it as you would expect a resistance level to be.
Oh, what I was going to say is, I'm just going to finish this episode and then I'm going to be done. So it's going to be a while, like 40 minutes, but I just want to finish on the end of an episode.
Respecting. If it's going to go lower.
Tomorrow AM locking in to start the 2023 mentorship. Nice, man. Yeah, I'm not going to lie, bro. I don't know if it's necessarily the best, like, use of your time, but, you know, I just picked one of them and I just started watching it. Like, the reality is it's really boring. But for me, I'm at the point where I'll do whatever it takes. If that means watching every single ICT video, I'm going to just do it. So, yeah, it's really boring, but every hour I spend watching this stuff, I always get something out of it. I, like, always do. So it's worth it to me.
It's going to do what?
Yeah, I'm going to finish this video and then I'll be done.
What's going to go up, fail, go up, reject it, and send it lower. Wonderful. Wonderful. That's exactly what you want to see. You want to see that. You should not be freaking out when the market's rallying up back to these areas here because we have this behind it, this balanced price range. This is kind of like the...
So he's calling this a balanced price range. I'm calling this a hidden order block. But he's basically saying, because we have this balanced price range here as backup, this fair value gap is going to be very strong. So remember that, right? If we have a hidden order block above a fair value gap, that initial fair value gap is going to be very strong. So I'm going to write that down, right? If you have a hidden order block above a fair value gap, that initial fair value gap is going to be very strong. That's what he's basically saying. Let me replay it for you guys. Brain dead says for hours. Dude, people binge brain dead soaps. Yeah, it's pretty brain dead, but I just got to keep going.
It's going to do what? It's going to go up, fail, go up, reject it, and send it lower. Wonderful. Wonderful. That's exactly what you want to see. You want to see that. You should not be freaking out when the market's rallying up at these areas.
That's something that it took me a long time to understand, but a BPR is any time that you go back up and down. You've balanced the range. And I don't totally understand that completely yet, but it's just what ICT said, so I'm going to go with it. I'm still getting better, so.
Here because we have this behind it. Send it lower. Wonderful. Wonderful. That's exactly what you want to see. You want to see that. You should not be freaking out when the market's rallying up back to these areas here because we have this behind it, this balanced price range. This is kind of like the...
So he's calling it, once again, a balanced price range. I'm calling it a hidden order block, but same thing. And it makes sense that it's a balanced price range too, right? It makes sense that it's a balanced price range too because what is it also, right? As well as it's an order block, it's a low, high, low. So what would be there? A low time frame BPR, right? Low, high, low. This would be a low time frame BPR. So hidden order block because it wants one, it's a move higher and then lower before the move lower, but two, it's also a BPR. So it's both. It's a hidden order block and it's also a BPR. Because just conceptualize that, right? What happened? Well, it was a move up before the move lower, so that's an order block. Correct, order block. Move up before move lower. But what else is it? Well, it's a move up before move lower. So what does that mean? That means that there's a BPR here on the lower time frame. So that's why he's calling it a BPR. That's why I'm calling it a hidden order block. We're both correct, and yeah, we're both right. That's all I'm saying. So hidden order blocks are also BPRs. But why is he not able to cut it actually trading? I don't know, man.
the defender. Okay, it's the linebacker of price action. It's saying you can only go so far, Jack. You're not getting through me. It's the iron wall. Okay,
It's a good analogy though. Like this, we're not getting past this hidden order block.
saying no, can't get through me. So everything's coming short of that or falling short of this. Hang on one second. I gotta fix these headsets. Really uncomfortable. So if we see any kind of retracements back up into a fair value gap, that's reasonable. And you're going to see me explain this, and you're going to see your experience seeing it happen. When I'm calling specific fair value gaps, and it returns back to them. Sometimes it'll go through them, like we were looking at this morning. There was nothing in there for a trade. Nothing until I saw one fair value gap when it retraded back. I said, okay, we're going to use the fair value gap again. I tried to take a trade on it, and it just wasn't working out for me. And I had to kill it, and I would have stopped out, and I mentioned it on Twitter, if I'd have held my full stop.
Dang, there's still 5 of you
error.
watching. That's crazy.
You're gonna do it wrong too. You're interpreting price, and you're seeing objectives. I'm also trying to teach as well. But when you see these PD arrays, you're going to learn their characteristics because you're looking at them. This is what's usually occurring when someone watches my videos. Number one, they're not interested in listening to someone really expound on the logic that's required to know how to do this. If you are lazy, and if this offends you, unsubscribe. Don't ever watch me again, okay? Because this is for the people that really want to understand it. If you are lazy, you will not learn how to do this. There's no shortcut to it. You will go into charts. You will study. You will look at old data. You will backtest. You will tape read for months and throughout this year. And that's how you get good at it. Here's who's going to fail. Pushing a button, getting into a trade, whether it's demo or live. You will not be able to learn this because you're not getting the same type of feedback and insight by looking at these things I'm calling out on Twitter or when I reference it. Like, I just did it again in front of you here again today. Were you all here? I mean, did you see me not say, watch this volume and balance here? And look what happens. It goes right there, and it perfectly delivers to this candle's. What's the closing price on that candle? You're going to look right here. Okay. This candle's closing price.
See, look at that, guys. The perfection is just insane. Volume imbalance between this close and this open. Look at how sensitive that is. You can't make that up. You just can't make that up, man. All these people saying it's random. Okay, then why did we respect it perfectly to the tick?
4111.75. I told you, watch this volume imbalance. Trades up until here. What's the high of that candle here? 4111.
So once again, treat volume imbalances like little baby New Day opening gaps. They're little babies. They're little baby New Day opening gaps. They're little sensitive little baby New Day opening gaps. Just remember that, guys. They're just a New Day opening gap, just on the low time frame.
0.75. Perfect. Perfect, folks. Please don't come to me with this Mickey Mouse shit, supply and demand. It's nothing like that. It's nothing like that.
I love ICT.
When students sit down with me, and when I was doing one-on-ones in the late 90s, when I sat down with them, and I was doing this with the bond chart, and I would do it with the S&P, you should see their face. I mean, it's probably what your face looks like, too, when you're seeing it live, and you watch it happen. You're looking around the room like, am I supposed to know this? Like, you're waiting for the knock on the door, like, the Men in Black are showing up. Because it shouldn't be this
ICT
perfect,
really is.
right?
Dude, what would we do? What would we do without ICT? Like, how would we even learn trading? We would have... Is there anyone else that even has stuff out there that's, like, true and correct? We would have to figure it out all on our own. Dude, we would be screwed. We literally have so much to thank for ICT, because without ICT, like, none of this stuff would be on the internet. None of this stuff would be common knowledge. We're literally so blessed, dude. We're so blessed. If it wasn't for ICT, like, this is why I always give credit to ICT, because without ICT, we'd literally all be so screwed. We would have no information. All of these other YouTubers, like T-Trades, like Dodgy, all these other guys would not have anything. They wouldn't, because they got all their stuff from ICT. We got so much. So anyone who's hating on ICT, just realize you gotta be grateful, man, because he could have just stayed silent about all this, and we'd have to figure all this stuff out on our own. But we luckily we have someone who's been in the market 30 years, who actually knows what he's talking about, and he gave it to us all for free. Like, we are so stupidly lucky, guys. And I mean, I will never understand why more people don't watch it. It'll never make sense to me. It's free content. You know, people would probably pay like $100 a month for this same video. You know what I mean? Like, people pay what people pay to become a doctor. You pay $100,000 a year. This is free on the internet. Guys, why would you not watch this? It's just so easy, so simple. Who wouldn't watch it? Like, yeah, it's boring. Yeah, it sucks. But you're getting information that's going to pay you more than a doctor. I will never get it. I will never get it, bro. I mean, the main reason people don't is because they don't believe in it. But tell me the market's not reacting off of ICT concepts. Tell me it with a straight face. Tell me it. Because you're wrong, man. It's just crazy, man. ICT knows a lot more, but he said he will never let it out in the public. Yeah, I know. There's so many things he doesn't talk about. No one will ever better than him. Okay. I disagree. That's why he's gatekeeping, because he's scared. He's scared that someone's going to be better than him. It's kind of funny, actually. So dumb people, while people who sell courses, the same ones learn from ICT. Yeah, bro.
But yet
Exactly.
If the markets were really designed for your betterment, it should be something like that. It's an investment. But they treat it like, let's turn it into casino. Let's turn it into a casino experience where they blind you by never having windows, never a clock, because they don't want you to know how much time you've wasted losing money. So how do they hide this stuff in plain sight? Indicators, baby. Indicators. And in case you don't like the indicators they've already pushed on the masses, they're always bringing what?
That's
new
real.
round of indicators.
They're always trying to tell people.
They're already starting to do it with my
way.
stuff. Here's a fair value gap indicator. It's bullshit. It's bullshit. You're not even bringing in the most important criteria to that. You can have a fair value gap indicator. It's gonna give you-
Like we always say, like I've said in my videos, a ICT concept is useless if you don't know which ones are gonna hold. So a fair value gap is completely useless if you don't understand that there needs to be a liquidity sweep and then a break of structure, right? We can't use just any fair value gap. Same with an inverse fair value gap. We have to know, like, we have to have a liquidity sweep and then an inverse fair value gap. It's very systemized. And, like, that's why people think it doesn't work, because they just don't understand it.
you every single one of them, and you're going to look at that and think, what? It's overbought, oversold. It's overbought, oversold. And you're going to lose money. And you're going to say, oh, this ICT, he's a scammer. He can't ever do this live. He'll never live stream and call these news. I'm doing it. And you're still plugging your ears and closing your eyes. The people that are learning, they're excited right now because they're seeing evidence. They're seeing a testimony every single day that the author is talking to you, baby.
I'm not
There's
leaving
no
until this
denying it.
video's over, so I'm going to be here
when
a
you
while.
see these things repeat, like I
We're
mentioned
almost
here, the
done
volume
now.
amounts. Watch that volume amounts. I even facetiously said, oh, you're going to tell me that small little range? Yes. And what does it do?
Let's go,
It
we got
overshoots
another
it. So
sub.
why? There's no mohawks in the lawn.
But after this, I will be done, and then, I'll get to bed early so I can wake up and lock in for the market, and then we'll, after that, go to work and stuff. But yeah, in the morning, we're going to lock in. We're going to take the best trade we possibly can if a trade presents itself, and we're going to do it. We're going to do it. I'm excited for tomorrow, and also this entire week.
Shoots a little bit, so it's seamless. Then it does what? Comes right back up. What's the close? I'm sorry, what's the low of this candle here that frames the high of the volume imbalance? I know, I love you too. You're sitting there thinking, I love this guy. Man, I love this guy. Yes, I love you too. This is going to be an amazing year. You should be thankful that you sat down and listened, because there's going to be a whole lot more of this fun shit. The low of this candle, 4109.25. Guy's thinking to himself, how the hell did he just say that? I was thinking, I didn't say that loud. He's in my head. What's the high of that candle? Gotta be on the candle, this right one now. 4109.25. Exactly the low of that candle. 4109.25. Folks, listen. I took your attention on this live stream. It wasn't a tweet that got deleted that was incorrectly called. It wasn't something else. It was exactly that. And what did we have? We had unrealized objectives. 4101.25, which is this level here, and then the 4098.50 level, which I mentioned on Twitter. But it went further, ICT. Yeah, it's fine. I don't care. Do you hear any regret? Folks, if you know what I'm teaching you, and I know it, I don't worry about missing a move. The sun might not come up tomorrow. That's always a probability. It's not likely to be high probability, but the world could end. Anything could happen. And I'm like, go to meet my maker before I'm ready. Well, I'm always ready, but before I would expect to do it. Barring those extremes, if the market's going to open up tomorrow, I'm going to see these things occurring in price action. You're going to see them occurring.
Exactly.
They cannot hide it from you.
Yep.
They can't.
OB right here. OB.
You should not worry
Exactly.
about my algorithm being changed. It's not going to be changed,
So
folks.
you could have this OB, this pretty high probability OB, or maybe have the fair value gap as a high probability fair value gap, and then take a low time frame flow, stay off of it.
If I honestly believed by sharing it openly like this, if it would somehow be changed or augmented. I honestly, my flesh, the sinner in me would keep it to myself. And that's the honesty. That's truth. If you can't respect that, then, hit the road. But there's no reason for you
He's
to worry.
so honest. He's so honest about it.
You're wasting time worrying about stuff that has no bearing on your development. You're providing perfect excuses for you not to even start. Which gets back to one of the SoundClouds I did. Are you deserving? Because some of you probably don't believe that you are. And that's going to be an amazing barrier to you ever getting good at this. No matter who you learn from, whatever style or approach to trading, you don't want to fail. Deep-rooted fear of failing. So you'll make perfect excuses to justify why you're not going to try hard. I'm just never going to be able to do it. I won't be able to follow the rules. So why bother? I just might as well call it a scam. He's a scammer. He's never going to live stream. I'm doing it now. I'm calling it. I'm telling you on Twitter, and I'm telling you here. Come on. Wake up, man. You're going to burn through this whole entire year and waste this opportunity. So, anyway. So now let's look at through the lens of your trading model is, say, it's the last hour of the day. Okay, so it's like 3 o'clock to 4 o'clock New York local time. If that's what you're trying to do, you have to understand where the market's likely to go. Where's it trying to reach? What's the draw on liquidity? That's the number one thing as a trader I force on my students to learn. You may not be good at it quickly. And that's the reason why I teach that premise first. Because if you start working on that as your first hurdle, that's the first thing you're trying to learn, and you're doing it correctly, by time devotion doing it over and over again, the other skill sets which are very easy, which are entering. Which sounds crazy because you heard me say multiple times now. My hard part about trading was what? Conquering the fear of getting in. Now, my strength is getting in. Like I could have said all this stuff and been wrong. I'm on live stream. I'm out here without a safety net. And the market makers can hear and see me, and they know me. Do you see them crashing the market because I said it? No. Manual intervention is always a risk. That means something's going to happen that you didn't expect, some black swan event, and boom, the market's going to go crazy. I expect that in Forex soon. That's why I'm not trading Forex. I'm trying to be a good steward with this information and also be a good human being because I feel that that's exactly what's about to happen. You are going to trade whatever you're going to trade. I understand that. But it would be unethical for me to know what I know and not warn you. And that's all I've done. So I have a clear conscience. If you choose to do those markets and you get burned, I don't want to hear or read an email from you. You should have told me because I've said it multiple times. I think that we're going to see something similar to when the euro and the Swissy was depegged, which is unbelievably damaging. I don't know when it's going to happen. I don't have a timeline for it, but I know it's soon. And I don't want to be in those markets where I could get hurt. I could very easily get hurt. And you could potentially get hurt too. That's not to say you can't lose money in this market too, because obviously you can. But the type of move that I think is going to happen in Forex is not going to be the same type of move that we would see in this. It might
This is getting
move in
really
similar
boring,
fashion,
I'm not gonna
weak,
lie.
big drop down, but not to the magnitude and speed and
I'm
velocity
finishing this episode,
of
though.
which like a depegging was when euro and Swissy was depegged. If you don't know what I'm talking about, Google it and look at that chart. Nobody survived. Brokerages were shut down over that move. They were insolvent instantly, just like that. And you can't survive those kind of moves, folks. You just can't. So I tell you that so that way you can prepare yourself for it and not get yourself hurt. I think 4088 was the next level. I had in my notes, I don't have them right here with me, but 4088 was the very, very last thing. And I didn't expect that really, to be honest with you.
Oh, man,
Today I
there's
was
quite a
wanting
bit
to see
left.
trade until tomorrow. So we'll see 4088.
To be honest, I
Lord,
might
I think
just end it
damn it.
here and finish this episode later. I'm getting kind of sick of it. That's what I'm going to do. Okay, I'm just going to end the episode. There's no reason to push myself when I'm not feeling it. It's just getting really boring. Yeah, I'll see you guys later. I'll probably see you guys tomorrow morning.